All right, sit down, tune in, turn on. We're going to get started here in just about 30 seconds. It's your 30-second warning. It's Don Kaufman here. We're going to be discussing a little bit about Ultimate Trades. Stay with me here, just again, about 30 seconds. Feel free to chat in. Let me know that you hear us all right. Okay, you'll see us in a second. And again, we will go ahead and get started here in just a few seconds. All right. Good morning, good afternoon, possibly good evening. Just depends upon what time zone you are joining us from. My name is Don Kaufman. You're watching Ultimate Trades. I'm going to jump through just a few, if you would, informalities before we officially, get off and rolling here. First of all, feel free to chat in. And I'm pointing to another monitor over here, but feel free to chat in where you might be joining us from today. I am broadcasting live from Payson, Arizona, a very cold Payson, Arizona. It's not that bad today, but winter, done with it, just done with it. By the way, you think of Arizona and think of warmth in the winter, but I'm up in the mountains. So real small town up here. Again, feel free to chat in where you guys might be joining us from. Let us know that you hear us all right. When I say I have a few informalities, one of the aspects that always comes up here is first and foremost, yes, this presentation is live. And I always make that comment because people always ask it, here you go. It's live. This is a live trading application, and obviously date, time, everything is on there. By the way, we will fire off a couple of positions as well today while we are live here, if that's all right with everybody. So nothing I'm doing constitutes that you necessarily have to trade with me, but I will fire off a few live positions. Next thing, throughout the course of today's presentation, by all means, I urge you, ask questions. It's fine if you want to ask questions. So you'll see me looking around a little bit. I'm on multiple monitors here, and depending upon what monitor the Q&A is on the furthest monitor away from me. So by all means, if you have questions throughout the course of the presentation, by all means, fire them in. Like even if it's not pertinent to that moment in time, I will come back around and answer those questions for you in the latter portion of today's presentation. It's just important that you realize, everything that you ask will get answered at some point during today's session. So I can answer the question. We actually have Brian Aponte that's answering questions in the chat room. We also have Brandon Chapman and Jeff. So all three of them are actually typing answers. I'll verbally answer your questions though as you go along today, and I think that's a critical portion of this. So without further ado, we're going to go ahead and get started. I'm going to cover a tremendous amount of material today, so sit back, relax. I'm definitely going to go over the hour that we have allotted today. I hope that's all right with everybody. I constantly am adding to this presentation because there's a lot going on in markets right now. So this is Ultimate Trades, and that's exactly what we're going to be discussing here. Ultimate Trades, high probability income generator. Again, my name is Don Kaufman, and you are watching a Theo Trade presentation. Risk disclosure, we are not financial advisors nor a broker dealer. I always give that little disclaimer because I did spend time in the professional trading world. And then, of course, I was 15 years inside of the brokerage world as well, which I'll discuss a little bit about my background here momentarily. The next aspect, this is why you're here. I want to make sure that we hit upon these 5 points in considerable detail. And the first one is we're going to discuss, Ultimate Trades. You're going to discover why Ultimate Trades are just ideal for the current market environment. I mean, in fact, it's more ideal now than it has been even in the last 2 years. And Ultima not only has been working in the last 2 years, I'm not just going to show you results from Ultima today. I'll actually show you every single trade that I did last year in one individual portfolio. I mean, every single trade. One thing that I am emphatic about throughout the course of today's presentation, okay, I am full disclosure, no holds barred. We show everything, account balances, you name it. We will show you from soup to nuts, entry and exit, not just winning trades, losing trades, and everything in between. But it's critical you understand, at the end of today's presentation, what is Ultima? Like, why is it ideal for the current environment, and why can you generate monthly income from doing this? Number two, right off the bat here, you're going to learn a trading symbol. Okay, we use this all the time to be able to create Ultima trades. In fact, excuse me, I'll show you a few of these particular symbols. And when I say symbols, what are you going to show me? You're going to see here in literally the next 5 minutes. You're going to learn how and where to find edge as a retail trader. One of the most critical aspects, the most critical aspects of understanding, trading is where you as retail can find some definitive edge. And that's a lot of what this Ultima really is. In fact, that's what Ultima boils down to, is where edge happens to be for retail. By the way, I'm retail, you're retail. Retail simply means we're not market makers, right? Market makers, we're not proprietary trading firm. Retail, we usually use something like a TD Ameritrade, a Charles Schwab, a Robinhood, an E-Trade. I mean, those are our trading platforms. We're retail, hear me roar. Number four, we're going to talk about benefits of high probability trades while learning how to mitigate that risk. The one key to what we're doing today, it's not just about, bringing in monthly returns. And of course, that's why everybody comes here. How do I make money? How do I make money consistently? We'll show you that. But what's imperative to understand is how to keep it. That's the one thing, like nobody, you make money, okay? And you eventually get hammered. That's not going to happen in this, okay? We're actually going to show how to generate income, but then mitigate the back end risk. When I say mitigate, it's just control back end risks, because the reality is, okay, anything that works eventually can take some hits, and we got to be able to control some of the hits that we're going to take. Number five, we're going to talk about what products, when I use products, what stocks, what equities, what works and what doesn't, what really is viable, and what is a recipe for disaster. And those are five very critical points we're going to hit. Obviously, we're here today to discuss in considerable extent Ultima trades. Nevertheless, okay, we have to hit those other points. We have to understand in context of what we're putting together in these Ultima trades. Next on the docket here, this is our gift to you. It is a $500 value. It's the auto expected move indicator. I will provide you a website at the end of today's broadcast where you can actually go and download this particular indicator. And you're like, oh, no, an indicator. Listen, many firms, education firms, they charge a fortune for different indicators. I'm emphatic about certain indicators. The indicators that I use, I don't use MACDs and Fibonacci's and Bollinger Bands. I am not a market technician by any stretch of the imagination. And I want you to know that right now. I am a quantitative trader. If you've never heard the term quant, okay, I'm a numbers geek. I'm a probability geek and a numbers geek, plain and simple. What this particular indicator happens to do and what it brings to the table is a quantitative metric of efficiency or inefficiency within a marketplace. And you stay with me right into the end of the webcast. And we do that again and provide you that gift right at the end of the webcast. Stay with me. The indicator, well, looks something like this. And you're like, oh, what is this? What is this? Listen, there's a reason also that I like to host these webcasts during the trading session. As I said, I'm emphatic about certain things. And I don't like to talk about trading without executing trades. It's for nothing. Like if you think about that, you can talk a good game. Okay, I've worked in the business now since 1998. I'll execute trades, but I'm emphatic about, again, showing you what works and what doesn't. What you're actually looking at right now is an expected move on the XLF. How many people here are familiar with XLF? Okay, because again, a lot of people live, some people will watch this, recorded. That's fine, but if you're live right now, you could say me, in the chat. So some people are pretty familiar with XLF. It's the financial sector. And what's really unique about the financial sector, what you're looking at here, there's three lines on your screen. And I'm actually going to highlight them for a second, because this is, even though it's a free indicator, but listen, we use this constantly, right? This is where the week started. This is the upper edge of expected move, lower edge of the expected move. When I say expected move, what do I mean? expected move, let's say equals plus or minus $1. It doesn't tell you which direction the market's going to go. But what it's doing is it's handicapping how far the market can go within 1 week. And how does it do that? It actually uses the options market. So the way that the expected move calculation works, it actually takes option prices, okay, and converts them to movement. So, you can look at something like the XLF. Here, you want to see one really crazy? Okay, this week, the SPX. The reason this is so crazy, check this out. The SPX, where is it right now? So the SPX, which is the mother of all products, this is an options only product. I said the O word. I said options. We literally, okay, hit the upper edge of the expected move and pulled back off of it. Okay, it's efficiency. It's about efficiency in the marketplace, and I don't think that's an indicator worth seeing. Again, this is the SPX. Okay, it is a $4,334 product. Okay, we drew some line on a screen and it hit it. By the way, this line, okay, on the screen, these are forward looking. This is not drawn like today. It never moves. It's completely static. Sometimes we breach it, sometimes we don't, but it is an absolutely indispensable indicator. And I urge everybody, stay with me right to the end of the webcast. It's worth it for the indicator. And we do that because we just feel like, hey, listen, we built the indicators. Okay, we're the ones who commissioned it to be built. It's one of the most complex indicators ever built for this particular trading application. We want people to have it. Again, it's not built. We built it to share it. All right. With that little housekeeping item here, listen, this is skill set. I'm going to fly through a tremendous amount of material in the next probably hour and a half. In doing so, I highly urge you, okay, focus. I know people are doing this off the side of their screen. They're working at the same time. Shut the door, turn off Skype chat, whatever else might be distracting you. Close Facebook, get rid of Facebook forever. I think most people have gotten that already. Phones on silent mode, kick out the kids, the grandkids. Listen, you took the time to be here. This is important. This is a skill set. Focus on being here. And I'm pretty adamant about that only because we're going to go through so much information. I don't want you to miss something. Within this presentation, there are portions of this that are for absolute novice. There are actually portions of this presentation for people that are extreme. Like if you've been in this business for 15 years, I guarantee you're still going to pick up items, okay, that you were not aware of. I mean, again, I try to really gear this and I'm constantly adding to this presentation. If you've actually been here before and seen a little bit about Ultima trades, it'll be different. It'll be different today for sure. Next, a little bit about me. So if you're brand new here and have no idea what a Don Kaufman even is, I would be Don. This is, I guess, a little background on me. So I watched order flow for approximately 15 years, and it is in large part what's kind of brought me here. I have a pretty unique skill set. The unique skill set wraps around the fact that, first and foremost, people always ask how I got involved in this business. I grew up around traders. My uncle was a market maker. My cousins were market makers. I mean, I literally grew up around traders. And 3 weeks out of college, I went to Chicago and started trading. Only about 18 months after that, I was invited by a gentleman I knew on the trading floor. They traded in the OEX pit, and they said, "We're leaving the trading floor." Excuse me. They said, "We're leaving the trading floor. We're starting this thing. It's called Think or Swim." And of course, every time somebody hears Think or Swim for the first time, they start laughing. But I said, "Sure, man." At the time I was 24 years old. I went with them. I actually built the education division of Thinkorswim. I've actually helped extensively in creating some of the tools on the Thinkorswim platform as well. There I sat, at Thinkorswim. I started there in the early 2000, like 2001 timeframe. I was on the executive team when we took the company public in 2007. I was, of course, there when TD Ameritrade bought us in early of 2009. It was almost $1 billion deal. I signed a 5-year lockup clause with TD Ameritrade, and I exited in February of 2015. I had about 1 year I had to take off, which I did, and we ultimately launched TheoTrade. Much of what you are going to hear discussed today has a lot of background information from what we learned both at Thinkorswim and TD Ameritrade. At TD Ameritrade, I ran education. We had 7 million clients, and we studied order flow. We studied everything you did. And you think about the power of what order flow provides you. People, they come from all different walks of life and they educate, people in the stock market. There are a handful of people in the entire world that had access to order flow, okay, and the depth of flow that myself and, well, a handful of other people did. Those handful of people we have also drafted here at TheoTrade. So TheoTrade is not just myself, not just Don Kaufman. We've actually got Jeff Bierman, we've got Blake Young, we've got Brandon Chapman. Those individuals also came from both Thinkorswim and TD Ameritrade background, all having that same exposure to that order flow. When I say the order flow, you tell me your trade, I can tell you every nuance about that particular trade. Meaning, like, you say, well, I went out there and I did covered calls. I can give you success ratios on covered calls. Was this client successful doing, iron condors? Except we wouldn't look at one client. We would look at hundreds of thousands of individuals that, traded particular strategies. What you learn here at TheoTrade comes from literally watching billions of dollars in others' mistakes. And the reality, okay, of what works best expressly for retail traders, which is you, me, it's everybody. So the other aspect I always like to throw up here, if you ever need to get a hold of me after today, by all means, please shoot us an email. We use a common inbox. I'm just Don Kaufman. Put that in the subject. Just go to support@theotrade.com. But I did want to give you a little background on me. By the way, I still do some media hits. This is actually TD Ameritrade TV. I just got off of a TD Ameritrade TV. I literally just did an interview in the last hour. This is a CNBC. I'll still do appearances from time to time on CNBC. This is myself pitted against Kevin O'Leary, some other major, TV networks. Yeah, I'm still doing that from time to time. It's fun, it's exciting, okay. But like CNBC now, they tell you what stocks you have to talk about, which really ruins it for me. Let's get down to business. What are Ultima trades? So what are Ultima trades? The first thing that we want to discuss with Ultima, okay, the very first thing, let's get down to business here. All right. Higher volatility has resulted in significantly more options premium, right? So this is the second time now I've mentioned the word options. Now, I'm not here to constantly like shove options down your throat, options down your throat. But I am here to tell you that options these days truly are a cart leading the horse. What's the horse? The horse is the market. What's actually driving that horse? The cart. Options now are actually moving markets. If you're not familiar with that, I'm going to tell you right now, get familiar with it. That's why we look at expected move. That's why we look at, options premium. One thing that I think we can say unequivocally is that option premiums and volatility in the overall marketplace, it really kicked off 2 years ago, right? March of 2020, the onset of COVID. It hasn't relinquished. In fact, it's worth noting, and again, we can bring up charts till we're pretty much blue in the face. We can bring up VIX. So here's VIX, and let's take a look at VIX over the last 3 years. Okay, so this is obviously right here is March of 2020. Here we are presently. I mean, we're in one of the highest right now. Okay, right now we are in one of the highest sustained volatility crisis since all the way back to 2008. If you look at all the volatility that occurred here, this was up and down. It was what we term a little flash in the pan in terms of volatility. Do you realize at this point, you are now sustained volatility north of the 20 level in the VIX? Okay, for what? You're moving into your third month, third month of sustained volatility. The irony of that is, again, it didn't even happen really much during COVID. We had collapsed back down in fairly short order. This is a very, very different feel. In addition to it, again, so we have higher volatility. Options implied volatility skew has remained at incredibly high levels. And what we term the volatility remains at record highs, which is what we term Ultima. So this is where I say time out for just 1 second. Everybody always asks me what ultimate is. And I say, Ultima trades. And they go, whoa, what is it, like ultimate? That's not what this means. Okay. We have found a very clear, very decisive edge in what is termed Ultima. This has to do with the volatility of a volatility. And that really kind of confuses people. But one of the symbols that you can pull up, if you wanted to see this, one of the symbols you can pull up, okay, is the VVIX. It's the volatility index. The volatility index. Let's look back over the last 5 years. In fact, let's get crazy. Let's go the full Monty over here. This is the full chart. The VVIX, which is the volatility index, from the onset of COVID, has rarely crossed below 110. So what am I saying about this? Like, you're like, oh, who cares? Okay, 110. 110, okay, VVIX, that's what that line is drawn on. It's higher, it's considerably higher. What it's telling you is the volatility of the VIX remains at record levels, period. There's no, anywhere in history of looking at VVIX where it was sustained this high for this period of time. Not even during the financial crisis, it had actually collapsed back down, which is interesting. So from the onset of COVID to present time, the VVIX has had this wild level, and that has a huge amount to do with Ultima. In addition to it, and combined with skew. What is skew? And I don't want to go into detail. Skew has to do with a distortion, if you will, in option pricing. Okay. Skew has actually remained also at record highs. And people look at this and they go, oh, that's an interesting chart. Listen, you can chart skew. The symbol is SKEW, just like it says right there. Skew right now is at 130, but this is the history of skew. Well, even 130 would be considered high. We just came out of a 150, 160. We even had a 170 print in skew. Skew has been phenomenal. So what we actually have, okay, in the construct of like, you're like, how do I make money? And it gets a little bit confusing, but high skew, high volatility of the volatility. And that coupled together is Ultima. And we're actually going to put this into context because everybody like hears this and like, okay, VVIX sounds good. Okay, skew. Yeah, I get it. We're skewed. We really skewed. Okay. That's all for nothing unless you know how to use it. And everything I try to do today, again, I try to put it in some context. How can we actually use skew to our advantage? Skew provides edge, excuse me, in sale of the out of the money options. Again, I said the O word, I said options. Many traders are currently buying options and in effect tweaking pricing to be beneficial for premium sellers. So once again, time out there. Many traders are currently buying options. How do I qualify that statement? You guys tell me, how do I know this? How do we know that a lot of traders are buying options? Let me ask you something. How many of you have opened up a trading account in like, I don't know, pretty much since the onset of COVID, like the last 2 years? Tons of people have. How many people like have had accounts for a few years? You've had accounts for a few years, but you just started trading options like in the last couple of years, right? Or the last year, right? The volume inside of options is absolutely exploding. Here's the interesting thing. Typically, if you're new to options, they only let you do one thing. They really only let you buy them. They don't usually let you sell them. And if you are selling them, they let you do a covered call, which is always problematic. And that's how like Robinhood treats clients. That's how like if you open up an account with a Charles Schwab, they're like, you can buy options. Most people that have hopped into the options market, they open up accounts with like $2,000 and they say, I'm going to buy me some options. Okay. And they just go for it. I'm going to tell you right now, that's what I call retail traders gone wild. Want to see some interesting statistics in here? And the interesting statistics, this doesn't come from me. This is actually the OCC. This is a nightly report that comes out. Okay. OCC stands for Option Clearing Corp. Yesterday, okay. Oh, I apologize. This is 2 days ago. Whoops. 2 days ago, we did almost 40 million option contracts, except that's actually below average. The 2022 year-to-date average has been almost 43. So we've been averaging almost 43 million contracts a day. You go, whatever, man. I don't even know what that means. When I left the brokerage business. In 2015, we were lucky to do 16 million contracts a day. Look how far we've come. It's unbelievable. Like trading these days, everybody who's anybody, they're all using options. And I'm telling you unequivocally, this is retail traders. More accounts opened in a 6-week period at the onset of COVID in April of 2020. More accounts opened in a 6-week period than had opened in the previous years, 5 years. That's how many accounts they opened in 6 weeks at the onset of COVID. And those traders, they're chugging along, and they're largely responsible for the huge volume in options presently. And again, we've been averaging 43 million contracts this year in the midst of volatility. It is awesome, and has also opened up incredible opportunity. That opportunity comes by way of learning to sell options. So many of you that are joining us today, you've heard through the grapevine, selling options is a way to be able to make money. Well, let's qualify that. How many people have heard that? Huh? How many people have heard that? That selling options is a great way to make money? Before I talk about the risk side of it, I just like to ask that question, because if you've been involved in this business for any period of time, you do hear that a lot. You're like, well, I'm buying options, and I'll be like, YOLO, right? The YOLO is when you take the entire account and dump it into one trade. Either it works or it doesn't. And for most people, it doesn't work. Don't think that that's a good thing. And then they hear about like selling options. But then there's two pieces of stigma around selling options. What are the two pieces of stigma? There could be risk. That's one of them. But the really negative stigma around options is, I need a lot of money to do that in my account, which is absolutely not true. Or there's even a third one. My brokerage firm won't let me sell options. That's not going to impede upon you here, because I come from the brokerage world, right? We know how to circumnavigate every rule because we helped write the rules. Many of you, again, have heard this. Selling options is a way to make money. But if you've experimented, you know full well that there's risk. What I intend to do today, separate myth from real risk, fact from fiction. As I said earlier, this is a no holds barred approach to selling options premium. Even if you have no intention of selling options premium, okay, I urge you, pay attention. You are going to learn something today. Even if you don't want to sell options, you have got to see what we are doing in this construct. Why am I so adamant about that? And I don't want anybody to panic in the options front, because some people are just vehemently against the idea of ever wanting to learn anything new. And I get it. But the one thing that I implore you to understand, that options are now moving the market. So even if you're not going to trade options, it's imperative that we understand what they are, how they move markets, and what we're doing. One thing I want to bring to fruition before I jump in here and freak you out with some new ideas. What do you think this marketplace is going to be for the next few years? Like, I really want, like, that's open for interpretation. What do you think this marketplace is going to be for the next couple of years? You think this is going to be the easy ride of like, I just buy me GameStop and it works. I just buy Microsoft and it works. Wake up, look around, okay? The bear is angry at this point. And even if you don't necessarily constitute that we're going to be in a bear market for a period of time, which the NASDAQ has already closed in bear market territory, I think that each and every one of you has to agree that we're going to be in an extraordinarily volatile marketplace. Even if the geopolitical risk were to subside today, okay, assume it subsides today, the Fed is not going away anytime soon. And what a day to discuss the Fed, okay? What a day. Today, we start the climbing of interest rates. Interest rates are going to go up today. Quantitative tightening, though, is the key, right? There is a very, very famous saying regarding the Fed. And I want to bring this to fruition before we dive into this. There is a very famous saying about the Fed, okay? What is it? Everybody always says the same thing, and you don't hear it anymore, and it's so ironic. What's the saying? You don't fight The Fed. You don't fight the Fed. You don't fight the Fed. You hear that constantly. Okay. You don't fight the Fed. How come I haven't heard that in the last 3 months? Okay. Because the Fed now is going into tightening phase. They're going into a tightening phase. Nobody on Wall Street wants to say don't fight the Fed because that means get short. Why don't they want that? Because they don't want you to pull your capital out of your accounts. Go to cash, go to cash. How is cash going to help you? We're in an inflationary environment right now. It's hideous. We are teaching today expressly around what to do in a Fed tightening cycle, what to do in volatility, what to do possibly in recessionary times. Okay. Geopolitical risks can only help us at this point in time. Okay. And that doesn't always sound like a positive thing, but hey, listen, you need to function, okay, in a marketplace and in any marketplace. Take what the defense gives you. And right now, they're going to give you volatility. And volatility, that is fine with us. Don't panic. You can do this. You may know nothing about options, and that's okay for today's session. Newsflash. This is the second time I've mentioned it. You can sell premium now in a very small account. If you have a retirement account, you can sell premium with as little as $5,000. If you have a regular, just tradable, marginable account, you can do this with as little as $2,000. And don't tell me, I can't, I won't. I'll show you. And again, I always like to say, I'm very no holds barred approach. I will show you everything, including my margin requirement. This is an IRA, okay? So I am clearly doing stuff in my IRA. I'll get rid of the futures contract in here, so I apologize for that. But this is my IRA. I am trading options in my IRA, okay? And I'm going to show you exactly what you can and can't do. I'll show you the margin requirements. This is for a small portfolio. This is a portfolio that I built so clientele of Theo Trade can follow it. And I'm telling you, it only ties up $1,200 of margin. So don't tell, I can't do it. I can't. You can, you will, you should. For starters, today, look to grasp, if you're brand new, big broad strokes of logic, right? We'll talk about probability and risk. That's for people that are brand new. You want to think about probability, risk, logic. For those of you that have some experience under your belt, you want to be able to grasp detailed concepts, what we term criteria, specifics, the little nuances, okay, where that edge is found. That's what we're going to jump into. There are many facets of selling premium. By the way, when I talk about selling premium is an entire genre of trade. And I say a genre of trade, like selling premium, you can call it selling premium. You can call it credit spreads. You can call it short call spreads, short put spreads. People use the term bear call spreads, bear put spreads, delta neutral trading. Types of delta neutral are selling premium. You could talk about selling naked. It sounds dirty. It kind of is, okay? But selling premium, you can be bullish, you could be bearish. That's fine. But today, we're actually going to use relatively neutral market stance. So I prefer to use the term market neutrality. You're not going to see a bunch of MACDs and Fibonacci's and Bollinger Bands like people. That just ain't me. Again, I'm a quantitative trader. I'm about probability and price. So let's get down to it. Probability and profitability. Your trading, no matter what you do in this business, is based on probability. You and I can create trades all day long with a 90% probability of success. One of the things I get still every single day, I get a couple of emails. People always email me and they say, what's your track record, sir? How often are you right? And I go, 90% of the time. Like, listen, you can teach, you want to see in 30 seconds or less, I can teach you to be right 90% of the time. Are you ready? Okay. And it kills me because people think that being right makes you money. I even put it in here. Probability alone doesn't make you profitable. Remember that. Want to see in 30 seconds or less how you could be right 90% of the time? Let's go to Apple. Okay. Let's go to Apple options. Let's open up options that have 29 days left. Let's go over here to what's called probability OTM. That means probability out of the money. Let's go over here and say, oh, look, if I sell this option, oh, I have an 85% probability. Like I want a 92%. Well, there you go. There's almost a 93%. You happy? In 30 seconds or less, you too can be right over 90% of the time. That doesn't necessarily make you money. Markets are always a trade-off. Everything's a series of trade-offs. Higher probability, you could have higher risk. You could be right 90% of the time, you can still lose money. But where can you find the edge? That is what people are here for. It doesn't do us any good to go, oh, you're right 90% of the time. You got to know where edge is right now. Good, because that is precisely what we're going to be discussing. So this is the point where you really want to start paying attention, because now I'm going to talk a little bit about options, a little bit about probability, a little bit about price, and we're going to discover probability and premium selling tactics. So here's a $50 stock. Now, the first thing I would like to say about this $50 stock, okay, and look, I always put everything in terms of a distribution curve. Want to know why? Okay, I don't want you to have bias in here like, oh, it's going to go up or it's going to go down. Like, look, can it get to 55? You go, uh-huh. Can it get to 45? Uh-huh. Okay. Can it get to 60? Yes. Can it get down to 40? Uh-huh. Like, who cares? Think about the marketplace as I can go up, I can go down, I can go left, I can right. Like, why are you so infatuated with direction? I'm asking that as an actual question here. That one, again, these are not rhetorical questions. I don't care what your answer happens to be. Why are you so infatuated with direction? To be honest, I find direction difficult. Everything that you ever see in this business is about direction. Turn on CNBC. What do you think the market's going to do? Guys like throwing a chair across a room. He's like, oh, buy, buy, buy. It's chaos, the whole marketplace, because that crap sells. It just sells. People are like, I have a piece of technology and it tells me where the market's going to go. Let me give you a quick tip on that one. Okay. When people tell me that all the time, I have a piece of technology, it tells me where the market's going to go. See this piece of technology? This is called Thinkorswim. We sold the company back in 2009 for almost $1 billion. It does not tell you where it's going to go. If it told you where the market was going to go, it'd be worth like 100 billion. Wait, this is Tastyworks. Okay, I was not involved in the making of Tastyworks. This company just sold for $1 billion. It is a unicorn. It doesn't tell you where the market's going to go. Okay, and yet it's still worth $1 billion. But what it does tell you is probability and price, because what trade matters is probability and price. And that's exactly what we're going to be covering. I love to bring that to people's attention because they go, for the low price of just $2,000, I bought a piece of technology that tells me where the market's going to go. And I'm like, really? Because, when Thinkorswim sold, it was almost $1 billion. And it didn't do that. And it has the most elaborate charting platform in the known universe on it. Anyway, with that, we're going to go out and we're going to construct an options trade. Okay. Now, first thing, do we own the stock? No. Do we want to own the stock? No. Do I have to own the stock? No. Why don't I want to own the stock? Because it ties up money. Okay. I don't want to own the stock. For those of you that know anything about options, great. If you don't worry about it. We're going to go out there. Okay. And we're going to sell, you're going to love this, a 60 call. We're going to sell a 60 call. And for that, we're going to collect a $1 credit. Let's just put it down here. So I'm going to sell a 60 call. And I'm going to collect $1 credit. We're going to say that's good for, I don't know, 2 months of time. Time out. There are people here that are brand new to options. They don't even know what an option is. So I'm going to get you up to speed. For those of you that understand options, you bear with me for like 3 minutes. For those of you that do not understand options, you focus for 3 minutes. When I say bear with me, even those of you that understand options, I'm going to throw some little caveats in here and blow your mind in a second. So the stock's trading at 50, but I do not own the stock. I go out there and open a position by selling a 60 call. See, the problem with doing this, people go, I don't even know what a 60 call is. How can I sell something I never owned? So let's look at it from the other side of the equation. Let's say you were a buyer of a 60 call. You could go out and buy a 60 call. You go, I don't know what a 60 call is. I go, I know. I'm just going to explain it to you. 60 call. 60 call gives you the right to buy the stock at 60. What is a 60 call? A 60 call is an option. It's an option to buy the stock at 60. That's what a 60 call means. You go, do I want to buy the stock at 60? I go, you might. You don't have to buy the stock though. If you buy a 60 call and the stock goes soaring higher, you don't have to ever buy the stock at 60. You could just sell the call and make money that way. Does that make sense? So let me give you an example. What does the 60 call give you the right to do? It gives you the right to buy the stock at 60. You don't want to buy the stock at 60? No. But let me give you an example. It says you buy a 60 call and you pay $1 for the 60 call. Now, where do you need the stock to go? 60 call gives you the right, but not the obligation to buy the stock at 60. So a 60 call gives me the right to buy the stock at 60. Why would I want a 60 call if the stock's trading at 50? Because I'm bullish, man. I'm so bullish. I feel bullish. I woke up this morning and I felt so bullish. Let's get crazy. Let's say the stock goes from 50, goes right to 70. Oh, 70. That's big boy. That's all the way up here, right? So now we're all the way at 70. 60 call gives you the right to buy the stock at 60. You have a stock at 70. If you could right to buy the stock, if you have the right to buy the stock at 60, but everybody else in the world would have to pay 70, that call is worth at least what? Okay, $10. $10. It's going to be worth at least $10. And you go, well, what happens if they won't give me my $10? Then you can exercise your right to buy the stock at 60, sell the stock at 70 in the open market, make you $10 that way. Welcome to options. It's that easy. Like options are not that tough. You know, people make this business so much harder than it needs to be. So you could buy a stock, okay, and buying the stock ties up a lot of capital. But in this case, I'm just buying a 60 call. But if you think about a 60 call, 60 call is way far away, you know, way far away. So you have a stock at 50 bucks. What happens if the stock stays flat? You lose your $1. What happens if the stock goes down? You lose your $1. What happens if the stock goes up to what, 55? I mean, think about all the places this stock can go. The stock can go down here, the stock can go up here, the stock can go up here, stock can go up here, stock can go over here, here, here. In every instance, you're like, I'm a loser, I'm a loser, I'm a loser, I'm a loser, I'm a loser. The only way you make money on this 60 call if you buy it is if that stock soars. You go, well, what happens if it gets to 61? You pretty much break even. That's the downside of options. But we're not here to buy the 60 call. We're going to sell it. And people immediately, they balk at this. They go, how do you sell something that you don't own? I'm selling myself into an obligation. They actually call options contracts for a reason, because it is a contract between a buyer and a seller. In this case, the buyer has rights. The seller has what? Obligations. I'm selling myself, okay, into the 60 call. I'm selling myself. I'm like an indentured servant at this point, obligated to give somebody stock at 60. So I go out and I sell a 60 call and I collect $1 for it. What's the most I can make? If you sell something for $1, if you sell something for $1, what's the most you can possibly make on it? $1. If you went out and sold a car, a used car, you sell somebody a car for like $10,000. Nobody's coming back a week later to tell you, oh, that was a great car you sold me. Here's another $5 grand. That ain't going to work that way. You sell a car for 10 grand, that's it. It's over transaction. You're obligated to deliver them the car. In this case, I sold a 60 call. I'm obligated. Okay, at that point, I'm obligated, but I collect $1 for the obligation. Okay, so what can happen to me after I sell the 60 call? Remember, if I sell a 60 call, I am obligated to give somebody stock at 60. But right now, the stock's trading at 50, so I'm in the clear. So from a probability perspective, what happens? If the stock stays flat, I keep $1. If the stock goes down, I definitely keep $1. If the stock goes up, let's get crazy to 55, still keep $1, right? Next 2 months, this thing's going to expire worthless. Even if the stock goes to 60, I still keep $1. When do I start taking risk? Well, the stock jumped, for instance, to 70. It'll be like, ooh, this is going to hurt. If the stock goes to 70, I'm obligated to give somebody stock at 60. You go, but I don't have any stock. Yeah, if you don't have any stock, you have to buy the stock at 70 to give somebody the stock at 60. It doesn't work that way. Basically, what would happen if the stock was trading at 70 and you have short a 60 call, meaning you've sold the 60 call, you're going to lose $10 minus the $1 you collected. But think about how rare of an occurrence that would be. Most of the time, what's going to happen when you sell a 60 call? I want you to understand this. I'm not saying this is a great trade, but I want you to understand this. okay, in context, if you sell a 60 call, most of the time you're going to do what? Make money, make money, make money, make money, make money. That's going to be an extraordinarily high probability trade. But what is the problem with the 60 call? It takes an extraordinary amount of risk. Even if you have a 90% probability of making money, I'm scared. Hold me, because you're scared because eventually that stock could jump up huge. Do we understand this? Okay, at this point, again, it's important to me, and I'm watching, the chat room over here. I just want to make sure everybody understands at this point in time, just a Y for yes, N for no. Like, I get it. You're selling yourself into an obligation. Like, I feel so obligated. Okay. And you are. And I'm actually going to show you now this in context of the real market. It's pretty quiet in the in the chat room. Okay. So should I assume the rest of you have I don't know what's going on? All right. We'll make sure you know what's going on. Now we're going to put it, and I say everything has to be put it's a fictitious example. I don't know. Let's put it into a real marketplace. Apple. Apple's not exactly a $50 stock, but I've always used marquee underlyings. My favorite low price stock to always talk about has been Twitter. Why do I like talking about Twitter? It's a stock everybody loves to hate. You even use Twitter. If you use Twitter, you hate the stock. If you use Twitter, you actually probably hate Twitter. Nobody ever loves this stock, and I think it's comical to me. But anyway, here, let's go 2 months out. I just wanted to show you from a probability and price perspective. Look, I can immediately just key into something right here. This is a call. This is a 41 call with the stock trading at 36 and it's 65 days out. And I just want to highlight for a second. Okay. This is something that, you could sell. You could sell it right now. And it would have about an 80% probability. By the way, people always ask me about these probability calculations are on almost every single trading application. If you have a broker dealer and they don't have probability calculations, you need to move immediately. This has been on the Thinkorswim platform. You want to know when? When I added that was 2002. Okay. That was 20 years ago. And almost every trading application now has probability and price because that's what options are based on. Such a cool way to look at it though. What's the chance of getting to 41? Well, there's an 80% chance we won't get to 41, which means there's only about a 20% chance we will get to 41, but that's 65 days from now. That doesn't mean right here, right now. It's 65 days from now. There's so many cool tools on some of these trading applications. So few people know how to take advantage of it. Anyway, we're going to move forward now into a more robust example. We okay? All right, the next one here. Selling options equals positive time decay. When you sell options, every day that passes sees the dwindling of an options premium. As time passes, the options that you've sold decay exponentially. Let's take just a moment and review time decay. Now, there are many of you, in fact, anybody in this group here, anybody, if you're in this group today and you've actually traded options or seen options, you've seen a decay graph. Am I right in saying that? Okay. And I'm sorry, I'm cracking up at some of the comments in the chat over here. It's getting good. Okay. So the point that I want to make with this is almost everybody's seen a decay graph. Decay graphs of this magnitude are extraordinarily misleading. See, everybody knows though what the feeling of decay happens to be. So let me actually show you this. I'm going to draw my own decay graph just real quick. Okay. You go out and buy an option. It doesn't even matter what option you buy. Let's say that you go out and you buy, I bought a 100 call. And when you bought that option, it was trading for $3. How long was that thing good for? 1 month. Time out. How many people have done something crazy like this? They just went out and bought a call. They bought a call. It doesn't matter if it's a 100 call, but how many people have gone out and just bought a call option? Anybody, right? Anybody just gone out and bought a call option. And when you do it, you pay $3 for it and it has exactly 1 month of time. And then the stock though, the moment you buy the call, you're on the clock. Like you're literally, when you buy options, you're on the clock. You go, I bought me a call, and you go, okay, here we go, big guy. Now you're on the clock. In the first few days of the trade, nothing happens. The option will actually go from $3 and will only drop to about, let's put it at $2.70, right? So the option you bought for 3 is now worth 270. Your first instinct is not that I'm wrong. Nobody ever thinks I'm wrong. That's never the first instinct. The first instinct is I'm okay. I'm okay. Like seriously, like if you're listening to this right now, you might realize that I was able to look at your account for 15 years. So any thought that you've ever had about the marketplace, I try to be at least 8 steps ahead of you, at least 8 steps. So the first instinct is, I'm okay, I'm okay. And then because nothing happened to the stock, but then you hold that position for another week, and now it's not any longer. You lost 30 cents the first, couple days, but now the option is going to be trading for $2, and you go, I'm in trouble. I'm in trouble. I need. That's the first time the phrase comes out. I need. What do you need? You need the stock to move your direction. Yeah, the stock doesn't agree with you. So you lost 30 cents, then you lost 70 cents, and now the option is going to be worth $1. You go, oh, this is going to hurt. You went from I'm okay to I need to this is going to hurt. And then just wait for it. That last week, the option's worth like, 30 cents. And you go, I'm screwed. I might as well just hold it till expiration, and it goes out worthless. Anybody ever experienced that before? Okay. I love it. Somebody says, double down, baby. That is hysterical. Okay. All right. You are a YOLO guy. This is the life of the option buyer. I'm okay. Okay. I need, I'm screwed. I'm sorry to be so, blatant with those terminology, but I've been in this business long enough to where I get the emails from you. And I sit there, look at people's accounts every day. Everybody sends me screenshots every day, and they all say the same exact thing. I need, okay, it's just, I'm okay. I need, I'm screwed. Oh, help me. And the one thing I want you to rationalize, this is actually not the decay graph that we're looking at today. Okay. One of the things you have to realize when we talk about Ultima doesn't follow the norm. Ultima found edge where other people have not. Okay. And again, one of the things that excuse me, one of the things I implore you to understand, you're not here to learn the same garbage that you've learned over time. You're here to learn things like this decay graph. It's not accurate. You say, what do you mean it's not accurate? This is a decay graph that's been used for 30 years in the industry. This is for what we term, this decay graph is here for what we term near money options. Near money options, we're not going to trade those. We're going to trade OTM, which is out of the money. Decay of out of the money options is completely different. Now we're going to drive home. Where can you find edge? Where can you find edge? Now we're going to go to a bigger boy product. We're going to go to a $100 stock, and I'm going to repeat the same example. Okay, same example I did earlier. So what I do is, here's a stock trading at 100. Now I'm going to go way out of the money. Way out of the money. What's way out of the money mean? I'm going to go out and I'm going to sell a 120 call. For the 120 call, I'm going to collect exactly $1 equals my credit. Now I'm going to bring it down here so everybody can see. I'm going to sell. Whoops, apologize for that. I'm going to sell a 120 call. And for that, I will collect exactly a $1 credit. Let's get crazy. This one has 3 months of time. Now, I put 3 months of time out there expressly to drive those of you that are experienced. I want to drive you crazy at this point. First of all, the construct of the trade. The stock is trading at 100. Do I own the stock? No. Do I want to own the stock? No. Do I have to own the stock? No. What am I doing? I'm going out there and selling a call. Am I selling a call naked? Yes, let's sell it naked. Can you do this in your account? You go, they won't let me do it. They won't let me do it. Don't worry about that right now. Let me just get the concept to you, because everybody looks at this, and the first time they look at this example, they say, you naughty man, you were selling calls naked. No one will let you do that. First of all, they will let you do this. You just have to know how to do this. Okay. But I just want to give you the example. I want to give you the probability behind it. Like, so calm down. I've had a lot of caffeine today. I'm 20% out of the money. Okay. Bear with me here for 1 second. I'm 20% out of the 20% out of the money is substantial, right? That stock has to move up 20% just to hurt me a little bit. Hurt me. But I collect $1 credit. Now, what people hate, they go, seriously, Matt, I'm going to have to wait 3 months to make $1? Like, this is not worth my time. Stop. I didn't say that yet. I want to show you high probability, high rate of decay. High probability, high rate of decay. Do you care how you make money? You go, interesting point. Do you care how you make money? Okay. People go, hey, at the beginning of the presentation, you said you can make monthly returns, and you can. But I'm asking you the question, do you care how you make that money? I'll make you money every single month. Do you care how you make the money? You go, no, man, just show me how to make it. Okay. We're going to talk about options that are a minimum 3 months out. Why? Because there's phenomenal probability and phenomenal decay. And you do realize this stock right here, that little monkey has to rally plus 20% just for you to feel, I feel threatened. Okay. 20% to feel threatened. So from a probability perspective, okay, from a probability perspective, this little monkey's looking pretty good, isn't it? So what do? Well, I sell something for $1 and then I go, sold. By the way, sellers, palms towards you, buyers, palms towards me. So I sell an option for $1. And then what do? I go, I do nothing. Everybody's doing something. I'm going to do nothing. Clearly, you can mitigate risk on here. You have to be able to control risk. But I want to bring the concept of you of selling something really far out in time. And you go, why? Because look, I don't own the stock. It's just, stock would tie up a lot of capital. This trade right here ties up nominal capital. Nominal capital. Watch this. If the stock stays flat, I keep the $1. If the stock goes down, I keep the $1. If the stock goes up, I keep the $1. If the stock goes up even big, I might wet myself, but I still keep $1. Right? What's wrong with this? Nothing. Will it really work in the marketplace? Absolutely. You have to learn how to control the risk. Let me show you in real context. Right? Are we okay so far? So you're like, I don't want to sit there for 3 months. Don't make me do it. I'm not going to make you sit there for 3 months. Okay. I'm going to teach you how to make money pretty consistently here. You ready? Now we're going to go to a trading application. Now I use Thinkorswim. I use Tasty. There's Tastyworks, there's Thinkorswim. Okay. I actually use them pretty seamlessly. I've got multiple accounts over here. Again, I show everybody no holds barred approach. Okay. Now win, lose, draw. Those are some smaller portfolios. I use accounts over here on Thinkorswim. But in this case, and in this particular trade, I'm going to go into the spiders. What is the spiders? Okay. It's the spider. Okay. The spider is the S&P 500 ETF, right? S&P 500 ETF. Now, just for argument's sake, as I said, I'm going to go 3 months out. You know what? Look, I got positions out here. So let's go all the way out to the June expiration. Let's go find an option worth about $1. I just want to make a point. I just like to make a point. This will work. So here's a market of 97 cents at $1.04. Ooh, do you think I could get filled at $1? Anybody? Any takers? Could Don get filled at $1? If I were to work it, this trade, by the way, from a probability point of view, got 93 days, 95% probability. Okay. Can I fill it at $1? I don't know. The market right now is 98 at $1.05. You guys want to see? This is like one of my favorite things to do. I like to torture markets. Keep an eye on the market. It's 99 $1.05 now. I'm going to work it at $1.04. Work it. So we're going to go out and we're going to sell it. This is going to move the market to $1.04. there's $1.04. Oh, how did he do that? He's moving markets. Because at this point, I'm the best bidder, best offer. I'm going to come in here now. I'm going to cancel or replace my order. When I cancel or replace my order, they're going to move the market from 99 to 104 to 99 at 103. I have a better way to actually show you this. You want to see something? Want to see something really crazy? Let me actually open that up for a second. I'm going to show you something interesting, something you will not see very often. Okay. And that is, I want to go right to these 492s. Look, we're going to open up, which is called exchange designation. You want to see me work in the order for real? Here we go. That is my order working right now. Okay. That's my one lot. As I cancel or replace, I'm actually going to pump the $1.03 in there. There's going to move the whole marketplace to 98 at $1.03. Ready, confirm, and send. Sends the trade. It's going to move to $1.03. There we go. That's now my order working at $1.03. If anybody's going to fill or anybody buys this option, I'm first in line. I have preferential treatment as a retail trader. So I'm going to work the order at $1.03. What am I going to do after that? Nothing. I'm just leave it in there. Like, what are you so scared about? It's not going to fill. So what? If it doesn't fill, I bet you anything, the market will be open again tomorrow. Fill tomorrow, fill the next day, fill the next day. It'll work. Work your orders, be diligent. Let's go back out 95 days or 93 days in this case. Why am I so adamant about the 93 days? Because I want to show you how there is extraordinary amounts of money to be made out in options that most people are not necessarily focusing on. The professional world understands this. The retail world, they're behind the curve in every way, shape, or form. They don't get it. They don't get what it means in terms of Ultima. So what I'm doing in this particular example, and I'm actually going to script the whole example up here for you, right? I'm just going to write it out. I'm going out, in this case, this is the 17th of June option, and I am selling the 492 call, and for it, I'm going to collect exactly $1. Then what do? Let's just say nothing. I'll show you how to mitigate risk. I'll show you how to control risk. And people are they're already asking me about the margin. I'm losing my voice again. They're already asking me about the margin. Don't worry, I'll come to margin in a moment. So don't worry about the margin. We'll come to the margin. So all right now I'm doing is just selling a 492 call. And what then I want to do, and just leave it up here for a second. I want to fast forward exactly 1 month. How do I do that? I'm going to close up the 93-day option. I'm going to open up the 65-day option. How many days are between 93 and 65? You go boop, 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 boop. About 30. It's about a month. About 30. Let's assume nothing happened. Is something going to happen in this marketplace? Yes, but assume nothing happened, because I'm always told this. Options that far out, man, they will not decay. They will not decay. You're wrong. They're actually going to decay massively, because that's actually what's going on right now with Ultima. It's not time decay. It's actually volatility decay too. Take a look at the option. Here's the 492s. So 1 month from now, there it is. 1 month from now, I'm going to go out and I'm going to buy back that 492. How am I going to do it? I'm going to go out and I'm simply going to buy the 492 call, and for it I will pay, well, let's call it 45 cents. What do I make on the position net? 55 cents minus transaction costs, 55 cents, or roughly speaking, okay, you're greater than a 50% profit in 30 days for an option that is monstrously out of the money. And I ask the question right now, because some of you are experienced. How come you're not doing that? Because no one knows. They sit there and they go, oh, that's interesting. Why else aren't you doing it? You don't know how to get around the margin. Why else aren't you doing it? You don't know how to control the risk. You got to understand margin. You got to understand risk in this particular case. And you got to understand exactly the right option to go in there and to sell. But you can make over 50% of the premium in less than 30 days. Okay, wash your hands of it and just do it again. You go, what do I do after that? Listen, after you make over 50%, do you realize you'd have to wait another 65 days to make another 45%? You think that's worth it? No. You close the position and move on. All we're going to do is we're going to sell way out of the money stuff. We're going to make half the money and do it again, do it again, do it again, do it again. This, okay, is what Ultima really is. You want to look, this is some inventory. Inventory means these are positions. Look, positions, they're making money. They're all up, 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 up. Percentage basis, they're doing quite well. You have to learn how to do this. First of all, why are we selling options so far out in time? You may have noticed in my example, a few months out in duration. Typically, traders are selling short dated options, but that's why you tune into this webcast. That's what we do at TheoTrade. Like anybody can come from any walk of life and you can Google how to sell options and they'll teach you how to sell options. No question about it. What don't teach you though is where the good decay lies. There's always a trade-off in this business. Everybody assumes, they assume when you look at an options chain, they assume that I should sell something with 29 days left. Okay, you assume wrong. At that point in time, you're putting yourself in a devastatingly high risk position. Why? It's called negative gamma risk. You're insane if you sell short dated options right now. But I read on a Facebook group that we could sell options with 0 days to expiration. Yeah, you can also go cliff diving too. There's a Facebook page for that. You know, I'm not telling you what to do, but I am telling you, you sell short dated options now, you will die trying. Everybody that does it explodes in that. You can't do it successfully. It's impossible. You can't move as fast as this marketplace can. We're selling longer dated options. One of the reasons we're selling longer dated options, because there's still a hell of a lot of decay on them, right? Why wouldn't you do it in that case? Number two, when you're selling longer dated options, look how far away from the underlying price I am. Like I'm out here at 492. Do you realize that the marketplace, I don't care if you open up a 15-year chart, we've never hit 492. Can we hit 492? Yes, we've never done it, but we could. And I don't want you to think that we can't for a second. All right. Like it's possible, it's plausible, but that's how far out of the money we are. We're like, we're in the nosebleed seats and you go, does it only work in the spiders? No, you can do it in a ton of different products. You guys ever look at the QQQ? QQQ, what is it? It's the NASDAQ 100. He goes to the NASDAQ 100. He opens up the 93-day expiration. I'm going to show you the same trade in like 10 different underlines. I don't care where you do it, but I'm telling you, this is the way you need to approach this. Look, all I'm doing right now, by the way, I'm trying to find an option right around $1. Why do I find it around $1? Because it amuses me. It's easy. So here's an option that's trading for right around $1. It's a 398s. I could sell the 398s. And a month from now, open up the $65, okay, or sorry, open up the 65 day, go out to the 398s, 398, 398, 398. They don't have 398s here. You have to look at the 400s. They're trading for 45 cents. So I'll do it again just to make sure. Let's go to the 400s. The 400s. The 400s. If I open the 400s, they were trading for basically 95 cents. Then I open up the 65 day. What are the 400s trading for? The 400s. Now they're trading for, roughly speaking, 40, 45 cents. They're half. You should burn about 50% in the first 30 days. What do we do after we make 50%? You just move on, man. You just move on. You do it and do it again. What do you think Amazon does? Okay. They sell you crap, do it again and again, small amounts of edge, small amounts of effectiveness. It works. You know, what's the key in here? Don't take a lot of risk. It's one of the primary keys to this. And one of the things I want to drive home over here is we're not here just to talk about selling options. We're here to talk about criteria. We're here to talk about the specifics. We're here to talk about like anybody can figure out selling options might be the way to go. But you got to get to the nuances. You got to get to the criteria. You got to get down to the finite details. Like, listen, 90% probability and the 10% hammer. Everybody okay so far? Because now we're going to get even deeper. And when I say we're going to go a little bit deeper, we're going to talk about the risk side of things now, right? So I say 90% sounds great, but 10% of the time, the market rips your face off. It's very graphic to think about that. Listen, when you trade high probability strategies, right, and you're wrong, you can get really hammered. You just saw me sell a naked call, and that scares people. People hear like, oh, naked, that doesn't sound very safe. You know, running around naked's probably not safe either. Nevertheless, we're not per se going to be naked, but I want you to understand the plight of the premium seller. Many of you have experimented with selling options. And if you have, you know, again, full, okay, risk, like You know full well what that means too, like full risk. Wait, what do you mean? For those of you that are a little newer, what happens to people that sell options? They go through this like this, everybody that sells options, by the way, comes into selling options in the exact same kind of walk of life. They learn a trade called an iron condor. How many people here have ever done an iron condor? Let's just, you know what? Let's lay all the cards on the table at this point. A lot of you guys have sold premium. Tell me, how many people here have actually sold some premium? Anybody? Anybody? Those of you that have sold premium, yes, 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 yes. No, 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 no. It's okay. If you've sold premium, you've actually done iron condors probably. Iron condors, for those of you that are brand new, you sell a way out of the money call, you sell a way out of the money put, then you buy a way out of the money call, you buy a way out of the money put. The risk graph looks something like this, right? So you have this huge window of opportunity, but you sell a call, you sell a put, you buy a call, you buy a put. So you're actually hedged, right? So you have this huge area that you can make money. I can make money from here to here. So anyway, you went to a class. You paid $500 to go to the class and they taught you an iron condor. By the way, you go out, you do the iron condor and you did it in the product called the spiders, the same product I just brought up a moment ago. You did your iron condor in the spiders. First time you did it, it worked. And you're like, oh, finally, that $500 I spent on that class is worth something. But the very first trade you did is worked. It never occurred to you that the trade probably had a 90% probability. Of course, it's going to work. Anyway, first time you do this trade called the iron condor, it worked. So you go out and do it again. The first time you did it one contract. The second time you did the trade, did in the spiders. Now you're doing 5 contracts. You're like, you're squawking your stuff over there. You're like, yeah, man, I know exactly what I'm doing. So you bumped up to 5 contracts in the spiders. And the second month you did the trade, it worked. I love that one. It worked. Okay. You now have 2 months in a row that you've had an iron condor work. Now, what are you going to do? Anybody? Anybody? In the third month, you're going to do it again. You just have 2 successful months. You took a class for $500 and 2 successful months in the third class, or I should say in the in the third class they made you take to learn the same damn thing. In the next class or in the next round, the third time you've done this trade, you stepped in and did it in a product called the SPX, the mother of all products. And you did 1 contract in the SPX. You did this gigantic, way out of the money iron condor in the SPX. And you know what? It worked. So now you're 3 months in and you were like, oh my gosh, this is working. I'm going to be like the next Warren Buffett. Lo and behold, you go out and do it a 4th time. And the 4th time you're in the SPX, instead of doing 1 contract in the SPX, you do 10 contracts in the SPX. By the way, the SPX is exactly 10 times the size of the spiders. So doing 10 contracts in the SPX is the equivalency of doing what? 100 contracts. Sounds big, doesn't it? 100 contracts in the spiders. 100 contracts in the spiders, that's when you're like throwing up in the corner. It's a huge trade. It absolutely is a huge trade. And the 4th month, the market has been baiting you the whole time. It's like, come on, come on, come on. Okay. And the moment you stepped up to the plate with that 10 contracts, the market's like, we got one. Huge move, huge move. It doesn't just wipe out the previous 3 trades profitability. It wipes out the 3 trades profitability and half of your trading account. Welcome to iron condors and selling premium. You are a train wreck. And if you've listened to this and if you've actually traded this strategy before, everybody always says the same thing. You're like, it's like, you can see my account. I could for 15 years see your account. How many times I've watched this? I can give you the dates and times of people blowing up, accounts over the exact same thing. And you're like, you guys have no idea what you're doing. The people that are actually teaching the class, they don't know either. They just realize one thing. You can get somebody hooked with 90% and you hope that they don't lose money for a couple of months because they're stringing people along doing it. You got to realize you will not survive selling iron condors. You will not survive. Has anybody ever been through this? Huh? Come on. This is, a 12-step program for traders. How many people, come on, admitting it's the first step today. So again, that's what we call the 90% probability and the 10% hammer. You have been lured very nicely into a high probability disaster. By the way, after you took the class for $500 and learned about an iron condor, you didn't stop there. No. Then you took another class that taught you, I can fix it. I know I can fix it. Fix is a very dirty word in this business. I spent a long time in the brokerage side of the business, and I got to tell you, I am a total cynic about fixing it. I mean, the worst crap I've ever seen happen. Somebody takes a trade that has $10 of risk, and all of a sudden they bury an extra $5 of risk into a $10 risk trade, and they go, I can fix it. Fixing, the very notion of fixing throws good capital after bad. It's like one of the first things you learn in this business not to do, not to do. All right. You always wanted to sell premium. Okay. But you have to mitigate the risk in some exposure. So people go in there and they go, I can fix the trade. I can fix the trade. Oh, I want to fix the trade. And all you do is just add more risk to a losing trade and rack up transaction costs. Some fixes might work, but the very notion of fixing throws good capital after bad. Listen, you need to learn how to do this correctly. Okay. I mean, fixing a trade is like taking a car, drive it off a cliff and bring it to a body shop. I mean, you can fix the car, but is it worth it at that point? No, it's a total and complete loss. You got to move on. Again, what we're going to teach you here right now is proper position structure. Learning how to do this correct from the get-go. We're going to discuss now selling options premium. Now, what we intend to do, okay? And again, I've been talking about selling premium for literally, I've been talking about selling premium for the better part of 20 years of my career. Has been a big premium seller for a lot of years. And the one aspect that people don't get about the premium sale is on the risk mitigation side. So what we're going to do is, look, here's an underlying trading right there. Okay, let's change up the color, make it a little easier to see. Here's an underlying. What underlying is it? I don't know, we call it the spiders. So let's just say the SPY, and the SPY is trading right at 430. We're going to go out and we're, for instance, going to sell, I don't know, some 492 calls, probably end up selling some 500 calls, maybe even sell, okay, some 485 calls. So I could have 3 different positions on simultaneously. We're going to go out here and sell 340 puts, okay? We're going to sell, for example, I don't know, maybe even 320 puts, okay? Maybe we sell from 360 puts. Time out! We've sold a bunch of calls and we've sold a bunch of puts. What good is this? It's all for nothing. Can't go out there and sell naked in this environment. All it's going to take is one wrong step. One wrong step. What can happen to you? What can happen to you if you went out and you sold, okay, a bunch of stuff naked up here and sold a bunch of stuff naked down here? What could happen to you? You could wake up one day and the market could be here, right? You just wake up and you're like, oh, this is going to hurt, okay? And it will, and it can. We can't do this completely naked. Doing this strategy naked and selling premium naked, you're a ticking time bomb at that point. And the irony is that's the exact same thing that happens to people with iron condors. You're going to make money in here like 95% of the time. 95% of the time, you ain't even going to touch the position. But in the off chance that there's a fast move to the downside or a fast move to the upside, you need to do what? Hedge, okay? You have to hedge. Enter the single most important concept that we are going to drive home to you today. Enter the hedges, okay? So right up here, and for the first time, we're going to explain this today, okay? Enter the hedges. These hedges are preemptive hedges. There will be 3 of them. Okay, the first one is known as RTS, which actually stands for risk, twist, spread. The next one, VVX, which stands for VIX, vol, spread. Lastly, we have a trade called a gamma iron. Those are types of hedges. What do they do? Let me explain this in context using VIX. Okay. This is the marketplace here in the spiders. Let's make this the spiders. Let's say we built this elaborate trade on the spiders to work for us, right? It doesn't have to be that elaborate, but here's the SPY, and the SPY is trading right at 430. Okay, so the SPY is trading right at 430. Do we own the spiders? No. Do we have intention of owning the spiders? No. Do we want to own the spiders? No. Okay, spiders are trading at 430. Let's say that we had a VIX volatility spread on right now. The market, let's say it tanks. If the market goes down, where does the VIX go? Where does the VIX go? If the market goes down, the VIX goes where? Up. And I'm not talking about, okay, I am not talking about going out. By the way, I'm actually going to answer some of the questions because the iron, the selling iron condors blow up your account. They absolutely, okay, blow up accounts. You have to understand something. The buck stops here. 15 years of watching this, okay? Sooner or later, 2008 comes. Sooner or later, 2018 comes, okay? People can't handle the risk. That's exactly what I'm talking about right now. If you ever want to learn this business, you want to survive selling premium, I'm going to tell you right now, you don't understand how to mitigate the exposure, you're already dead. You're already dead. Nobody survives the big move unless you have exactly this. Think about this with VIX. If the market goes crashing down, okay, because we're going to go out and we're going to sell some premium in a moment. But if the market goes down, it goes down fast, the VIX will pop to the upside. We're going to have a very small, okay, minuscule cost for a trade that if the VIX goes skyrocketing, the trade will actually explode in value. It's just what we term an outside hedge. Outside hedge means it's outside the norm of possibilities, but Jerome Powell comes out and says, yeah, 6 more weeks of winter. You will be protected, okay, extensively. It's a risk mitigation tactic. It's the same tactic that, I used at a trading firm that most of the trading firms use to this very day. What you have to understand about these tactics, though, people try to time them. You can't. You have to have a risk mitigation tactic on at all times. We're going to go out in this case, okay, and we're going to sell. Let's say we sell a 360 put. Now for 360 put, we're probably going to collect up to like $2. Then we go out and we actually probably sell like a 340 put. We might collect like $1.60, and you sell another put and another put. You guys kind of get the thing. And, we'll sell, for instance, a 490 call, collect $1. You're selling a 500 call, even further out in time, collect another $1. Come in here, maybe sell a 480 call, and let's say we just collected $1 on that. This is my inventory. This is why I'm in the business. What do I want to do? Turn over inventory. Just keep that inventory turning over. This is not a big, huge, crappy iron condor where you have one huge trade on. We have some inventory on. I want to make you into the Amazon of trading, where you're just burning through inventory. You just inventory, boom, inventory, boom, inventory, boom. Make 50%, get out, make 50%, get out, make 50%, get out. But lo and behold, 95% of the time, you're going to be just fine. The other few percent of the time, you better have a risk mitigation tactic to the upside or the downside. And I'm not going to sit here and tell you that the market is not going to come crashing down, because anybody that says that, or anybody that says they can time it, you could have woken up any one of these days in the last 3 to 4 weeks with a marketplace that was down lock limit, meaning you can't even trade. That's it. It's over. 7% down, lock them up. By the way, it's a 7% move now overnight that locks them up. Okay. We're not going to do that. We're always going to have like a VIX vol spread on. So I'm going to tell you exactly what's going to happen. The market's going to come down violently. And right in here is your VIX spread. And your VIX spread, okay, explodes in value and actually shields some, not all, but some of the loss in here. Want to survive in here? This is the way to do it. It's actually going to mitigate a tremendous amount of the downside. You go, how do I mitigate the upside? Number of trades, including what we term a gamma iron. The gamma iron, actually, you have to cross through degrees of profitability to ever hit, okay, to ever hit these strikes. So the gamma iron is an incredibly, incredibly powerful little strategy to where we have to hit degrees of profitability here before we could ever tag any of those strikes. These hedges, do they cost something? Yes, but it's nominal. But that nominal cost is imperative to be able to stay in this business. And I know the first time people see this, they're like, oh, you're selling here and buying here. Do you know how easy this is initially? You could actually open the position with one transaction. You just open the position with one transaction, okay? And lo and behold, like this doesn't have to look so complicated. This can look just like this. When I say just like this can look like inventory. Look, I got some stuff with 15 days on, some 44 days, some 65 days. This right here, this is a hedge. There's a hedge, and then there's some premium being sold in here. The premium I'm selling is up 33% and 38% respectively, okay? The hedge right now, well, I hope the hedge is a sacrificial lamb. Every single time we sell premium, we have to sacrifice something to the volcano. Don't anger the marketplace. And we do just that, okay? We hedge and we sell premium. We hedge and we sell premium. And we do it and only tie up like $1,200 in margin, net. By the way, this isn't an IRA. In a taxable account, that would only tie up $600 in margin. Never complain about margin. Listen, this is why you want to sell premium. This is incredibly high probability stuff, produces positive decay. You can even use this to enhance existing positions. In terms of probability, you got to understand like 95% of the time you do nothing to your positions. Nothing. They just sit there, make 50%, take them off, put another one on, make 50%, take them off, put another one on. You never need to buy or sell the stock, okay? You could be wrong on market direction and still produce profitable trades. I don't even talk about market bias or market direction because right now with the volatility, okay, the way it is, this is where you want to be. And do I have to have volatility sustained at these levels? No, because if volatility goes down, the skew will go back up, and the skew is actually even more advantageous than volatility. Okay, it is just on right now in terms of selling premium. I'm telling you, you need this in your life because what you can't handicap right now is a stock that's going to go up. What you can't handicap right now is the geopolitical risk. What you cannot handicap right now, okay, is quantitative tightening, what the Fed is going to do in the near future. What you can't handicap is inflation going to hit 7.9%? Wait, it already did that last week. Is it going to hit 10%? Okay, it's the highest inflation we've seen, bar none. Unbelievable. And it's in a zero interest rate environment. Well, now, of course, they're going to raise rates. But I'm telling you, you need this in life. Selling premium to potentially bring in consistent returns while actually minimizing your risk. Okay. You want to learn how to do this the right way. In a moment, we're going to discuss criteria. When I say discuss criteria, we're going to talk about the little nuances. What really makes the trade? Which options do I sell? How do I put on a VIX volatility spread? How many contracts do I do for my account size? That is what criteria brings to the table. Before I do that, I'm actually going to show you live trading examples. These are trade alerts. The variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts. By the way, this is the part that people always fight me on too. They go, my brokerage firm doesn't let me do that. Yeah, get a new brokerage firm. I don't mean to be contentious, but if your brokerage firm doesn't allow you to do what you want to do, you go, but I love them, man. Okay. Ain't no love in this business. They don't love you. Every brokerage firm has become Walmart. Okay. Take a look. People ask all the time, how come you left TD Ameritrade and Thinkorswim? Because I don't want to work. Okay. Welcome to TD Ameritrade. It's no different than, the Walmart greeting out there. That's it. Done. Okay. And I, went off into the sunset and spent time and, I never actually can retire. That's not ever going to be me. Right. My wife was always laughing because I spent months at home with this is in 2015 after leaving TD Ameritrade. She's like, who are you talking to up there? I'm like, I still talk to the screen every single day. I don't care. Okay. I'm telling you, you need to learn how to do this stuff. And I'm not saying this for my benefit. I'm saying it for yours. Okay. Don't tell me you can't do this inside of an IRA. I am showing you this is in my retirement account. That's a retirement account. Look, it's funded. There's 100 grand there. There's 256 in the other account. Okay. I don't care what account size you have. You can have an account size $2,000 in it, and you can pull this off. And every single trade I'm going to show you right now, and I'm actually going to start with like Tesla, every trade I'm showing you, you can do. These are actually what we call trade alerts. What's an alert? It's actually, we send out trades. We send out trades via text. Okay. We do text messaging. We also do push notification. TheoTrade, okay. TheoTrade has its own mobile application. See if I can actually pull it up. It's Theo Trade. I don't know if you can actually see that. Anyway, it's its own mobile application. Okay. Oh, I'm in a testing mode right now. So I'm actually in the app itself, which does push notification in here. And I just want to show you exactly what the trade consists of. By the way, this is Tesla. I'm just using this as an example. What I'm about to show you, I don't want to show you like 5 or 10 trades. I don't think that that's fair. I'll show you everything I did inside of what we term, okay, the Ultima portfolio. I'll show you everything I did for all of 2021. Here's Tesla. All you're looking at in here is, by the way, if you've never seen one of these statements, it's a little weird, but this is the day we opened it. This is the day we closed it. Let me make this pen a little bit bigger. So the day we opened it, the day we closed it. To open, to close, okay? The exact expirations, the calls that we traded, all right? The opening price, the closing price, and the return. That's it, okay? And if you look at this and say, where did that come from? Okay, you want to see exactly where it came from? It came from right here. On Thinkorswim, go to the account statement. Tell you what, here's everything I've done. Whoops, I was supposed to say SPY. I typed in SPY. Here's everything I did in this one account inside of the spiders for the last 360 days. Okay, you see every single trade, but it's a little weird. It's a little weird to try to read all of the trades out of here. So what I did is I matched up the opening and closing trade and put them in the slide deck. Guys, ready? This is 2021. Bond short put, 57% return. Listen, not everybody trades the products that I trade. I don't care. This is ZB. Like ZB is the bond product. So I went out and sold puts and bought the puts back, 57% return, 53%. IWM, I trade IWM, 62% return, 53%. Here's Tesla again, 76%, 60% the spiders, 50% the spiders, 51% spider short put, spider short put, spider short put, spider short put, spider short, or sorry, QQQ short call. So far I've traded bonds, I've traded Tesla, I've traded IWM, spiders, and Qs. 5 products, okay? 53%, 50%, 50%, 64%, 53%. I'm just ripping through. I'm still in like, February here. Okay. I'm just ripping through IWM up. There's a 19% loss. It happens, people. 52%, 52%, 49%. Okay. All I'm doing is just ripping through different positions that I have on in here. And again, every single position for all of 2021 is in here. Ooh, look, there was a Mo in there. So now I've traded a total of 6 products, okay, and we're already into like April. And I'm just ripping through trades here. Okay. Oh, there was some Amazon in there. Okay. At this point in time, I know we're almost halfway through the year. I started, instead of trading spiders, I started stepping it up a little bit. There it is. Now we're actually trading S&P options on futures. Why? The S&P options on futures is exactly 5 times the size of the spiders. So once clientele were comfortable following this Ultima portfolio, when they get a little bit comfortable and they get trade alerts, and again, these are all alerts that are coming to people. When I execute the trade, you get to see the trade. When I execute the trade, you get to see the trade. You get to see everything about it. When I open it, when I close it, it's no holds barred approach. Now, I'm not here to say alerts, 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 alerts. You still have to learn how to sell premium, but the alerts help and you can follow along in the portfolio. Okay. And we have various portfolios depending upon account size. So here's a 50% return. And of course, I'm trading a bigger product now because I wanted to get people a little comfortable. Okay. And once I get people comfortable, then I actually will switch strategy a little bit. When I say switch strategy, still going to sell premium. I'm still going here, still going here. This is now a Christmas tree trade. And this is where people, like if you've ever sold an iron condor, you're just putting your neck on the line. Why? Just learn the Christmas tree. Like, I mean, it's just ridiculous in today's day and age. The same crap is being done from 20 or 25 years ago. Okay. We're so far beyond that. Like you realize like people are still trading strategies that they were when I was back in this business, in the brokerage business in 2002, right? Christmas tree trade, wake up, learn how to do the trade. Look at the credit in here. Okay. Opened it for 21 bucks, closed it for a $3 debit. It is an absolute grand slam home run. And the cool thing about the Christmas tree trade is it packs a hedge into the trade itself. It's hedging and, okay, and it's actually selling premium all packed into one lovely little package over here. So the opening and close of the Christmas tree trade. By the way, 1 unit of this makes about $2,000. When I say 1 unit, like you could do a couple of units and $4,000 or $5,000. QQQ, TLT. TLT is also bonds, 53%, 55%, 19% return, 57%, 50%, 54%, 52%. And again, I'm just ripping through. Here's another Christmas tree trade. Again, you see the Christmas tree trades later in the year because we got up the food chain a little bit. $22 credit. Close, again, closed for roughly like $1, debit in here. Nothing. Okay. It is a huge trade. ES short put, ES short call. Okay. Listen, no time, no problem. Every trade, every single trade I displayed here was live at TheoTrade. And I want to say this, that, people are immediately going to ask, well, how'd you do this year? Okay. How are you doing this year? Okay. I have an answer for that. I can actually let you look at the portfolio for this entire year. There's no problem with that. So here's the actual portfolio. What we do inside of the portfolio is pretty interesting. This is actually a spreadsheet. The reason it's a spreadsheet is you can actually copy the trade. You can literally copy the trade. This is a trade that you can copy and paste directly into a trading application. You go, what? Okay, yeah, you can just take the trade and literally copy it. Watch. Okay, you can copy the trade. When I say you can paste it into the trading application, okay, oops, I didn't put it into the clipboard. You can paste it directly into a trading application. So we've actually built the trade alerts, and I'm pretty adamant about this because people, they're not exactly sure what to do right off the bat. So we build it so that you can see opening positions, look, and closed positions. See, I just closed under the Christmas tree spread right here. You can see the Christmas tree spread right here. All right. It's actually the Grand Slam home run of Christmas tree spreads. It was actually closed in 2 different transactions, but it was closed literally like 2 days ago. So if you're kind of curious, like if the portfolio is still going, okay, everything is in here. Like when I say everything is in here, every position that I place, okay, in my account gets detailed in here. And the reason we do this is because you just copy and paste the trades into a variety of different trading applications. So this is a very hands-off, like this is not like sitting there. This is part-time. I always put that out there, not to make you think like, oh, you're sitting on a beach, and trading, but you can go anywhere. Most of the stuff that we do, you can do off of a mobile application. You don't even have to have, if you want to have an iPad or something, cool, but you don't have to have necessarily even a laptop. You just get the notification. You can actually copy the notification and paste the trade or just recreate the trade. It depends on what trading application you want to use. I think it's pretty straightforward. The trading results, though, Ultima specifically is designed to be very, very hands-off. Most of the time, you're just monitoring trades. Okay, so it's an excellent time. Obviously, most people are actually still working from home, and I can't believe I'm going to say this, but some people, okay, depending upon what part of the world you're in, are being locked back down. A lot of clients actually I was talking to today, earlier today, that are locked back down in Hong Kong area. So a lot of traders out there. There's actually happens to be a TD Ameritrade office there, one in Singapore. And again, people are kind of locked down and they're trading very actively again. But this is how to emerge from a pandemic and geopolitical risk in better financial shape. I mean, listen, what our members are saying, Kevin, I absolutely love this freaking website, TheoTrade. There's so much here, so many different flavors. I can't pull away for more than 15 minutes. I can't get any work done. I could go on, but here comes the short I'm waiting for. This one comes from Paul. Jim, agree. Okay, there are many people here that make the cost of TheoTrade annual membership nearly every trading day. That's a nice 251 return on investment. Okay, TheoTrade's the best by far. I'll be with them for the rest of my trading career, no questions asked. Okay, and by the way, these are not solicited in any way. I actually grabbed these out of a chat room that we host. Okay, and when I say a chat room that we host, like again, I grab these literally out of a chat room that we host. Okay. Again, it's all in here, and that's why I just grabbed a couple comments out of there. Characteristics of selling Ultima Premium. The attributes of this are undeniable. You never have to buy or sell the stock. Risk can actually be dialed into your comfort level. And I want to express that because risk really can be dialed in to your comfort level. You're never going to use a stop order. We don't use those here. That is a dirty, dirty word here at TheoTrade. No stops for selling premium. There's other justification for it, but not in selling premium. You can vary time frames and actually minimize your risk. The probability of profitability is incredibly high, like 95%. It's a perfect strategy to enhance a stock portfolio. And I always want to stress that when I say it's a perfect strategy to enhance a stock portfolio, that it's not an understatement. Like you can actually take what you've learned in selling premium and apply it expressly to the idea of just like, hey, I have a 401k that's getting beaten up, but you can actually produce better returns if you sell some premium against it. So it's an excellent tool also for those seeking to build an account. I don't care whether they have a $2,000 account. Again, new products have allowed the sale for options in nearly any account size. You realize we are right now 2 weeks away from launching Bitcoin options too. Bitcoin options from the Chicago Mercantile Exchange, micro Bitcoin options. The micro Bitcoin options are coming. You'll be able to do this, okay, in the cryptocurrencies. You can actually trade options on cryptocurrencies, sell some premium in them. Think about how much premium is in those cryptos, okay? But you do have to learn to build a portfolio of options. And I'm telling you right now, do not let the options portion of this intimidate you. Selling premium, it can be done for minimal credits, okay, but also minimal risk. The one aspect that I tell you, like, you have to learn this to do properly. And I was going at somebody inside of the in the chat room a moment ago. I'm like, don't tell me that iron condors are just going to work. Okay. People blow up. Like, again, the buck stops here. I've seen everything that people do in their accounts. You have to learn. Options are the greatest power tool of the stock market. Okay. You know what? I call them a power tool of the stock market. If you wanted to go out and cut down a tree, probably not going to use a handsaw. You're probably going to use, a chainsaw. But if you don't know how to use that chainsaw correctly, you could take off an arm, you could take off a couple of fingers. Options can be the exact same thing. Options will be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you do not know how to use options correctly, if you do not know how to mitigate or control that back end risk, you're going to lop off a couple of fingers. That's what you're here to learn. Like, anybody can learn, hey, sell options further out in time, make 50%. That part's easy. Structuring the position, learning the hedges, that's what we're here to learn. You can sell options and minimize risk. Maybe you don't know options, have limited experience. The one point that I want to make and really drive home, you need these strategies for the foreseeable market future. You need them. What else are you going to do? You're like, well, I'm going to do this and I'm going to do that. You can get taken apart in this market. In fact, this market is designed to take you apart, systematically will dismantle, okay, traders. You don't believe me? Talk to anybody that's been trading, okay? Anybody that's been trading the last couple of weeks, last couple of months, they're getting eaten alive by this, okay? Premium sellers, totally prepared. You sell some premium, you're like, bring the heat, baby, okay? The more volatility that comes, the more premium we want to sell. The difference here is we can show you how and when to sell premium in a matter of a few hours, and it takes some time. We create detailed recipes for every strategy, including selling Ultima premium. And I always make this like, justification, like you wouldn't bake a cake without a recipe, but people trade without one. I mean, it's like your life savings is on the line and nobody seems to do anything. They'll just sit there and they go, my fund says it's a 2040 fund. I'll just stay in it until 2040. Telling you, don't just sit there and do nothing with your 401k. Okay. You can do nothing. You're fighting the Fed. If you do nothing, you are fighting the Fed because quantitative tightening is coming. Again, put all the geopolitics aside, put in fact aside the inflation. CPI is running at 7.9%. You think I don't look at that stuff just because I'm a quantitative trader and I sell premium? Okay. I look at that stuff and I'll tell you why I look at that stuff. I look at that stuff because I talk to clients like you every single day. I hop on things like CNBC or TD Ameritrade TV or CoinDesk TV and discuss these products. None of that stuff though matters. The only thing you have to understand is volatility is here. It's not forthcoming. Volatility isn't coming. It's here. It's now. Okay. If you don't feel it, if you don't see it, you're asleep at the wheel. You can't just sit and do nothing with portfolios. Okay. This is what you need to know to successfully sell Ultima Premium for a living. What underlying stocks or indices are going to make the best candidates? You saw them. I just told you, I traded 6 products, the QQQ, the IWM, the S&P options and futures, the bonds. I do like bonds. That's just me, right? Okay. I gave you a couple of candidates, right? What volatility should I seek out? You saw some Tesla, but I'll tell you what, Tesla volatility right now won't fit. You're crazy to do that. And you got to actually look like, hey, listen, there's a lot of products. But somebody asked me the other day, could I just trade the spiders? Of course you can. Of course you can. Why do you have to make this business so difficult? You can see I'm trading S&P options, trading a couple spiders here. All right, sure. But you have to have the right volatility. Too much volatility, you're dead. Too little volatility, you're dead. The volatility has to be kind of in a sweet spot. What options expiration do I select? This is probably my favorite discussion over here. If you haven't looked at an options chain lately, okay, Option chain. Let's actually pull up the SPX, the mother of all products. The SPX, there's 0-day options, 1-day, 2-day, 5-day, 7-day, 9-day, 12-day. Do you know that they're actually listing the end of Q2? They're going to list daily options. There's going to be expiration every single day. Every single day, there's going to be an expiration. But I told you, yeah, we're about 3 months out. But do I go 120 days, 16, 93, 92, 76, 65, 64, set hike? Do I use AM or PM settlement? Think about all the flexibility, the variability. How about we can dial in exactly what expiration, exactly what volatility, what should be the delta of the option I sell you? I don't even know what delta is. The rate of change of the rate of change of the option for every dollar move in the stock, but that's not what we're actually going to use it for. We'll dial in the delta if you sell. We'll actually tell you how many options to buy against the position. When I was structuring that position, and I was saying you will not survive without some type of a hedge, you have to know how many hedges do I buy for how many positions do I have on? How much risk do I want to take? You have to be able to dial that kind of stuff in. How do I build the position? Like, where do I actually search? Should I sell calls? Should I sell puts? How much margins are going to tie up? Okay. Do I need a large amount of capital in my account to do this? No. No, I always like to go back over to Tastyworks because Tastyworks is incredible with the margin in here. Okay. When I talk about like the margin, is let's just close up the whole position. Who cares? That's the margin requirement. But that's in an IRA. And an IRA ties up double the margin. So the margin I'm tying up, and this is a pretty good position in here. The margin in there is only $1,200. It's only $1,200 in margin. So you don't need a lot of capital. What is the right amount of risk for me? You can dial that in and we can help you dial that in. What are the percentage returns supposed to be? You make 50% on short options, but the hedges are going to, cut into that just a little bit. Think that's okay? It's the only way we can survive right now. I mean, let's not worry about direction. Let's sell some premium. Let's hedge. Okay. And hey, bring on the risk. The more we go down, the more risk you got in the marketplace, the better it is for you. How do I protect myself from market crashes when selling options? You use risk to a spreads. You use an inflection point spread. That's a term you're going to be hearing in a minute. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay. Trading, it's all about answering the what ifs. Okay. It's what might be a good stock or ETF candidate for you to sell premium in. What's the correct options expiration cycle? How much capital do I commit to generating premium? What strike price options do I sell? How many do I buy? Can I limit my risk? Okay. This all comes into this. Like, we build recipes with definitive criteria. We actually have checklists. Okay. For each strategy and each unique variable that you're going to encounter. Let me just give you an example here. The idea of the checklist comes, okay, from, predominantly me traveling. Okay. I would travel, you hop in an aircraft. If you've ever seen a pilot get into the cockpit, they don't get into the cockpit, turn a key and throttle up and you take off. Pilot gets into the cockpit, goes through a very definitive checklist. After they go through the checklist, by the way, I love the checklist the pilots do. It kills me sometimes. They walk around the aircraft outside, pulling on the engines, and I'm like, that engine moves. I am out of here, man. I'm like always watching the pilot. That engine moves. It's it for me, man. I'm out. I'm out of the contest. Look like, hey, stuff the stuffing back into the engine over there. But they have these really definitive checklists, and the checklist in pre-flight, although critical, one of the most important things is, what does a pilot do most of the time in the air? The answer is absolutely nothing. Like, they sit there and they do nothing 95% of the time. They go, dial 3 degrees left, 3 degrees. Okay, turning the plane a little bit. And they just dial this thing and they go, okay. 20 minutes later, when they're done playing Qbert over there, they go, okay, dial down. That's it. 5% of the time it can be sheer terror. And that 5% of the time is exactly why you have a checklist. You have a checklist so you know exactly what to do. What if we move down huge? What if we move up huge? What if dividend is coming? What if there's an expiration cycle and we're coming closer to the expiration? There's a triple witching. This is a triple witching this week. Okay. Oh my. Think about all the variables, the how, the why, the when. Okay. That is what we are here to do. TheoTrade is the answer to those questions. We'll give you the right probability for the trade. We'll give you how many option contracts, give you actually how to close the premium sell. What if we sell off big? What if we actually bail out of the trade? What if we rally massively? Can I fix losing positions? It's how, it's when, it's why, it's what price. And I'm telling you, it is just the beginning of the variables that you're going to face when selling Ultima premium for a living. You can read what selling Ultima Premium is. Okay. I always tell this to people. They're going to go out right now and you're like Googling like sell options premium. 10,000 results are going to show up. Most of them are advertisements. 10,000 results will actually show up for what selling options premium is. But maybe you even know how to sell options premium. Okay. Somebody's done an iron condor. Tons of you have done iron condors. But I'm going to tell you right now, you know how to build a few trades, but what you need, okay, what you need is TheoTrade's recipe for success. 20 plus years of trading experience. That's just me. And again, TheoTrade's not a one-trick pony. We have 7 other full-time instructors here, many of which actually come from Thinkorswim, TD Ameritrade, hedge fund backgrounds. We had access to client order flow for over 15 years. Okay, that to me was the most valuable thing I ever got in my trading career and didn't realize it until we built TheoTrade. Okay, we didn't realize it because we had access to all the statistics behind what works and what does not on the retail side of the business. We never were able to put that to use, okay, at TD Ameritrade. You couldn't tell somebody like, don't do that at TD Ameritrade. Don't do this. You know, people will remember back in the day. Back in the day, I used to go teach classes all over the country, be like, oh, do this, do this. We couldn't tell you what to do necessarily, what not to do in terms of specifics, but now we can. We can because we've actually viewed and studied millions of accounts. We're not regulated, okay, under the SEC like we were over at TD Ameritrade and Thinkorswim. Here at TheoTrade, we actually get to speak our piece. Again, viewing and studying millions of accounts is great, but now we can finally use it. Again, ran education at a firm with the largest order flow in this industry for 15 years. You get to know what actually works. Criteria is the recipe for success. And we literally spent years fine-tuning this trade setup. Okay. The following strategy and the corresponding criteria requires the utmost attention to detail. When you approach the section, okay, on criteria, you follow the steps to be able to build a trade. We built a full-blown 5-hour course on the Ultimate Income Generator. Okay. And I'm going to tell you right now, it's not $497. We incentivize people that obviously come to these presentations. Okay. But the one thing I want you to know right now, before I even tell you about the course, we do not sell classes here at TheoTrade and just walk away. Okay. What we provide here at TheoTrade is everything that you're going to need. Okay. From the absolute novice to some of the most extreme traders and everything in between. We do everything from trade alerts, meaning that you take a course like this, we don't just give you the course and give you a pat and say, go ahead. We give you trade alerts, meaning we actually send out messages to you, okay? Either push notification or text messages, whatever you prefer. We send you the trades, okay? We give you email support. We give you access to previous classes. We also, okay, provide, again, ongoing support, both in chat rooms, again, and email. And when I say email, you can literally email us and say, am I doing this trade correctly? Most of us, again, we come from the brokerage business. I actually ran, a $300 million RIA for years. We know how to answer your emails and your questions. All right. There's no problem. We actually enjoy doing some of this. So I built a 5-hour course. And again, I'll explain, excuse me, I'll explain precisely what we provide you at TheoTrade momentarily. Number one, there is a huge incentive to enroll, okay, for TheoTrade. I'm going to present that momentarily. Number two, okay, we are really the only ones that provide definitive and ongoing trade support. Anything that you need, okay, you can do Q&A and email, you can do Q&A in a live chat room, whatever you're comfortable with. Okay. But every nuance that you would need to be successful in this business, we provide it from here on out. From day one, you will have access to everything that we offer here at TheoTrade. 5-hour course is archived. Okay. The original Ultima course, it is archived. It is available immediately for streaming 24/7. And we have access and provide you access to download capacity in any of your mobile devices on TheoTrade Mobile for iOS and Android, okay? The checklist with all of the criteria, you can also download that immediately. When I say that this is, you can stream this, you can stream it to any mobile device, any computer, whatever does it for you, you can stream, right? And you can even download it as long as you have our mobile, application loaded up, all right? That is the Ultimate Income Generator course. What does it include? You're going to learn how to sell premium consistently, the curriculum, how to build an options portfolio. Okay. High probability generates consistent monthly returns regardless of the starting capital. We are going to get into in the class, it's 5 hours, detailed entry and exit criteria. That's the checklist to keep risk at a minimum. We're also going to learn a little bit about option Greeks, expressly delta, okay, and how to actually manage your positions through one easy number. My absolute favorite portion of the course is we will teach you to use a risk array. The risk array will allow you to visualize profits, okay, and risk before the markets ever make a move, meaning that you're going to be able to sit there and say, what if the S&Ps go up 5% or down 5% or up 10% and down 10%? What am I going to make? What am I going to lose? Okay. We'll show you then how to properly allocate around that risk and reduce the risk. Okay. And again, very, very hands off. And I just got to stress that because you're looking at the future of your portfolio, it should allow you to sleep at night, discover risk mitigation techniques to also hedge the most extreme market environments. So you're not going to get caught off guard. If you wake up and the market's what we call limit down, or huge crash, you're not going to have to panic. How to sell premium in small accounts. There's actually an entire 90-minute section of just how to do this in small accounts and, okay, IRAs, retirements with innovative new trading vehicles that have never been available before. So that's the Ultimate Income Generator course. In addition to this course, we're also putting you into inflection point spreads. It is a brand new course. How brand new? Recorded just over a week ago. We record it, we clean it, we package it, it's ready. The inflection point spread class is Ultima. It is a variation of Ultima designed for an extreme environment. Why did we host another class? Could see basically at the beginning of the year, things were getting extreme. That was an understatement. The 3-hour, okay, inflection point spread, we call it the IPS class, the inflection point spread class, it's archived as well. So not only do you get Ultima, but you're going to get the inflection point spread. And I'm telling you guys, you're going to love the inflection point spread. Is brand new, really cutting edge stuff that you're able to actually sell premium and manage risk all in one trade. Literally confirm and send. The whole thing is put on all in one trade. It's available right now. You can download it. You can start streaming it. Again, it was recorded just over a week ago. The class slide deck with all the entry and exit criteria, it's also available immediately. Here is the curriculum. You'll learn to sell premium and hedge risk in one transaction. High probability like positions, just like Ultima, because it is Ultima. You're going to hedge existing positions, even in the most extreme market environments. One of the hardest things to do. How do you control risk when risk is already coming? And we'll teach that. We give you detailed criteria for inflection point spreads, meaning that it'll have the step-by-step criteria. You're going to analyze inflection point spreads, so you're never going to get caught off guard by market conditions. And you're going to find how many inflection point spreads can you safely allocate for your particular account size. And again, you'll love this new class because by the way, I'm the instructor as well for the inflection point spread class. This is my newest class here at TheoTrade. It's ready to go. As I said, we recorded it just over a week ago. TheoTrade is completely riskless trade. There's a 90-day money back guarantee. We just say this: if you're not satisfied anytime in the next 90 days, what we do here at TheoTrade, we do not just sell a class again and give you a pat and say, go for it. It's not what we do. We actually get you, okay, onto TheoTrade for 90 days. What is TheoTrade? It's everything. It's the notifications, it's the classes, okay? We give you full access to TheoTrade for the next 90 days. At any point in the next 90 days, if you're not totally satisfied, if you're not loving it, just get your money back. It's fine. We have over 6,000 clients here. And I expressed to you, we want people here that want to be here, okay? We do not need your $300. Oh, by the way, I let the cat out of the bag. It's $300 for 90 days. We don't need your $300, okay? It's fine. There's over 6,000 members right now into TheoTrade. And I said members, but we don't even do membership. There's never a reoccurring payment. It's $300 for 3 months. You want to do it again? It's $300 for 3 months, period. Okay, inflation, yeah, we don't have any here. but we give you the money back guarantee. And we do that because, as I said a moment ago, I don't want anybody to come here, okay, and leave on bad terms ever. Okay. You don't even have to, there's no stipulations to the money back guarantee. You sign up, go to it, check it out. You don't like it, you can watch the classes. I don't care. You can sit there and binge watch it like, like Netflix. The funny thing is Netflix wouldn't give you your money back after watching the stuff. We will. We put our money where our mouth is and ultimately say there's no excuses, no questions. We don't need any commentary. If you're not totally satisfied in the next 90 days, please, okay, I urge you, get your money back. Okay. I don't want ever anybody coming here like, oh, I didn't like it. Fine. If you didn't like it, you can feel free to shoot me, an email. This, okay, is no holds barred. Like there's a lot of stuff on TheoTrade. I'm about to show you that, but we want to make sure that everybody that is here is happy. By the way, support at theotrade.com. You never even have to call us on the phone. Don't call me. Don't call me because I don't want to hear from you. Okay. Just email support at theotrade.com and receive a full refund. You just go refund needed. No problem. It's $300. Okay. I'll move on. Okay. I'll move on. So again, we want people that want to be here. That is one of the things that I always reiterate. Okay. It's an environment that it works because we got traders like working together. We have a lot of instructors here. We're always bringing on new people. It's a pretty open environment. We, everything we do here at TheoTrade, we keep it like PG-13 in the chat rooms and so forth. But we have a chat room now that's actually larger than what I had built years ago at Thinkorswim. So we basically have the largest community in the entire trading arena, okay, all built into TheoTrade, which I'll show you here in a moment. Go to theotrade.com/SKU. I'm just going to take you over there really, really quick so everybody sees it, okay? theotrade.com/SKU. And I'll pop the address up there too so everybody sees it. By the way, theotrade.com/SKU. It's S as in Sam, K as in kick, E as in echo, W. theotrade.com/SKU. The reason I'm popping into the site, when you click add to cart, again, it's $300. When you click add to cart, it's $300 for 3 months. I'm throwing the cat out of the bag, but I'll show you everything it comes with. Click add to cart. Apparently it takes a long time to pull up over here. Okay. There's a lot of you obviously hitting this right now. So give my page a moment. What I was going to show you on here, there's a money back guarantee. Okay. Let me say. All right, it's up. Okay. By the way, I apologize. There's a lot of people, okay, that are clicking on this as we hit it. The phone number. Go in there and type in your phone number. Why? That automatically enrolls you for the text messaging. Okay. So it does. It automatically enrolls you for text messaging. So I urge you to throw that in here. And again, the payment info, whatever. I don't care. You $300, 2 payments, 3 payments. It doesn't matter to us. Again, because there's money back guarantee on all of it. So just be aware of that. We want people that want to be here. Now, let me explain everything. Enroll now, okay? And I'll kind of explain it as we go along, okay? Bonus. And I say a little bit of a bonus. Listen, the incentive, it's $300. And I'm going to tell you right now, if you want, you can enroll today, okay? You can shoot me emails. One email back and forth, I'll save you more than $300 like that. That's the one thing that I always try to drive home to people. Like today, when you go to like TD Ameritrade, or you go to Charles Schwab, or you go to like E-Trade, you can't even pick up the phone and talk to anybody anymore. There are, again, we're closing in on almost 7,000 individuals here at TheoTrade. And there's one aspect that over 2,000 of those members, okay, here at TheoTrade, they just email us. That's why they are members of TheoTrade. Is, yes, they get unbelievable like trade results, and yes, they're getting the trade alerts, but a lot of them, it's like there's nowhere else to go now to ask questions. For $100 a month to be able to just ask questions to us, and we ask questions, we can answer them in real time in the chat room, which is, there's thousands of people in that chat room every single day. Some of them are just there to be able to do a little bit of Q&A because we can show you stuff on any trading applications in real time. Some of us just, hey, they just want to be able to somebody to email in case they get into trouble in this business. Okay. That alone is worth the cost of admission. I mean, that alone is absolutely worth it. And again, when we email back and forth, like, as I said, this is no holds barred. Like, I don't care. Like, ask me a trading question. I've had every brokerage license imaginable. I know how to answer the trading question. I've had my Series 3, that's futures, Series 4, options principal. Series 7, broker dealer. Series 24, principal broker dealer. Series 66, that was a 63 and a 63 and a 65 combined. It's registered investment advisory. You want fries with that? Had them all. Okay. None of that makes any bit of a difference, but I want you to know to bounce ideas off of this. We go beyond one class or one indicator. We give you everything you want to invest, everything you trade, and we do it at one place and at one price. The first bonus here, we'll give you a quick start video guide. What is a quick start video guide? Listen, some of you are coming here today. You're coming here today. By the way, this is Theo Trade. Okay. And in Theo, you can kind of see this is the actual live screen here. I'm going to refresh it. Okay. Let's say I'm refreshing it. I'm just going to go in here and actually see who's live right now. It's Tony Rago. Tony Rago is trading NASDAQ
50
futures.
in it, but let's see. We're in the right trade. There's no reason to counter it. It hasn't given us a reason to buy this thing.
Okay. Tony's actually trading NASDAQ futures with people live right now, and he's calling setups. Okay. So all of it is in here. Look, we're short plus 15. I'm adding now. Like all of it is actually in here. The instructors are highlighted. This is their screen broadcasting live. The start here menu. This is for people that are novice. Options 101, options 201, options 301. I'll tell you right now, order execution part 1, 2, or 3. I don't care how experienced you are in this business. You want to know everything there is to know in the retail brokerage business about order execution? No one understands the depth of order execution better than Theo Trade. No one. You go, how are you so sure of that? Who do you think helped build the execution system at Thinkorswim? Okay, 7 years, myself and Jeff Bierman worked on order execution. Every nuance from payment to order flow to how the order actually goes through. Okay, the system, literally I send my order from Arizona, it goes and authenticates in Texas, then actually curves over and goes into Chicago. We even tell you how the order, the actual direction of the order is routed. I'm telling you, okay, the classes in here, you could spend $50,000 easily on stock market education. It will pale in comparison to what we do. This, people, this is just the start menu. Okay, look at all the different classes, option Greeks, what products to watch and why, getting, your risk under wraps, risk control and hedging ideas. You want to see what it looks like? You click on one of them. Click on one of them. Here we go. Okay, this is a happy hour all the way back from 2016. Okay, risk reduction doesn't change. So that's the quick start beginner's guide. Then we give you access to every class that we've ever done since inception. We launched Theo Trade in 2016. Here we are in 2022, running stronger than ever. Think about how many classes we've done in that time frame. There's well over 100. In fact, if you want to see that, okay, here's the option classes. By the way, I am your resident options geek, but everybody that works here at Theo Trade has a different genre of trade. We have somebody that's into swing trading, it's Corey Rosenblum. We have somebody that's into technical analysis, Jeff Bierman. Okay, we have, again, a in-house psychologist, which is Slim Miller, and it goes on and on. We have intraday traders, which is Tony Rago. You just saw him on there. Okay, like option strategies. This is my, by the way, there's inflection point spreads, income accelerator, Ultima. These are the 3 most recent classes we have done here at Theo Trade. Inflection point spread, as I said, this is the stuff you want to watch. Okay, recorded, it's 2 weeks ago now. So this is what the class looks like. Okay, so you can see the class looks very, very similar to what we're doing here. Okay, we actually get into how to build the inflection point spread, but the entire guide of how to do this, you can download it right here. Inflection point spreads investing plan. Okay, inflection point spreads, and click here to download the entire slide deck. It's broken into 3 pieces, plus you get to see the full Q&A. This is how every class is, every single class. And you go, what other kind of classes do you have? You name it. Okay, volatility crash course, black book spreads, straddles class. Okay, fruit fly for consistent income, in-out spreads. I mean, it is the full Monty here. $300, 3 months, we don't care. Just, give you access to everything. Again, we built Netflix for trading. Some of the other classes that are available. Bonus number 3, we give you access to the chat room. The chat room broadcasts 6.5 hours a day. What's the chat room look like? I just showed you a moment ago, but bring it back up, albeit briefly. Okay, this is the chat room. This is us broadcasting our screen to you. When I say broadcasting screen, okay, Tony's live right now. He's talking. I muted him, but he's talking. Then you get to talk to other clients in here, right? So, the Fed raised by 25 basis points. Surprise, surprise. Anyway, you can kind of scroll back and see everything that's being done, okay? By the way, he's talking about, this is Blake Young. He's talking about specific positions, plus 38 and plus 19 on the two positions I have in the Russell. Okay. He's killing it today. By the way, plus when they say plus 39, okay, it's huge. Plus 38 and plus 19 is absolutely huge by huge. So that's actually the chat room. Everything is recorded too. Nobody wants to sit here, 6.5 hours a day, but some people do. We're giving you like another $1,000, for the next 3 months. We just pack it in there. Okay. The trade instructors, Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Slim Miller, okay, Tony Rigo, Blake Young. Everyone on this crew has over 15 years of experience in this business before ever coming here to TheoTrade. Jeff Bierman actually helped build the Thinkorswim charts. Okay. He's also a professor of finance at DePaul. Matt Williamson, market neutral premium selling. Corey Rosenblum, resident swing trader, CMT. Brandon Chapman, CMT, macroeconomics, technicals, fundamentals. Awesome. Okay. Brandon actually wrote the course manuals for the education. Okay. At TD Ameritrade. I mean, the guy is unbelievable. It's a great grab for us here. Slim Miller, 43-year veteran. Talk about him another minute. Tony Rigo, NASDAQ intraday specialist. And Blake Young also comes from TD Ameritrade, Thinkorswim, market profiles, futures, currencies, and commodities trader. Blake actually ran a hedge fund for a while too. Here's everybody working from home during the COVID days. Some fun stuff. By the way, I'm in a different location. I'm actually in Arizona. I'm heading back home. 2 weeks. I'm heading back home. Home is St. Croix in the U.S. Virgin Islands. We also give you access to 59 proprietary indicators and scans. Everything that we build, okay, for charting, we don't charge you more for any technical indicators. And I don't really use technical indicators, but many of our instructors do use technical indicators. We provide all of those to you. Okay, it's part of TheoTrade. All right, bonus 4, Theo Theta Live. What is this? This is the portfolio that I was talking about. It's the Ultima premium selling portfolio. And what we do with that portfolio is we simply just text you out trades. Okay, you get to see full disclosure on all trades, opening and closing positions. Okay, again, the portfolio, what does it look like? I'm going to show you in a moment. We also have the main Theo Theta portfolio. It's what I call the big boy portfolio. And then we have the Theo Theta small portfolio. What's small mean? Accounts anywhere from $2,000 to, like, for instance, $50,000. From $2,000 to $50,000, you follow one portfolio. If you're above $50,000, you can actually start to walk your way into the big boy portfolio. Portfolios, just copy and paste the trades. It's great. Like, it's just this, it's like a cheesy spreadsheet, but we do it this way because you can literally copy and then just paste the trade right into the trading application. We also do a weekly update. This is a Theo Theta, okay, or what we should term Ultima weekly update. What does that mean? If you miss what's going on throughout the course of the week, like markets are moving, if you miss it, calm yourself down. It's not a big deal. We update everything in 12 minutes on a Friday morning. In 12 minutes, you can listen to it and update it. Nothing is like intense. Oh, I need to get filled now. Just relax, okay? This is really hands-off trading, but in 12 minutes, I give you an update of everything that's going on in the portfolio. Bonus 5, technical analysis toolkit, okay? We have a really wide spectrum of technical analysis here. Tech 101, MACD indicators, timing-based trading systems, pattern recognition. There are 21 other technical analysis classes. Bonus 6, the day trading treasure chest. Just because I'm selling premium doesn't mean that we don't have day traders here. What do you think we do during the day in the chat room? Corey Rosenblum is on. He'll swing trade. Tony Rigo is on. He's day trading constantly. Consistent intraday strategies and setup, intraday trading, NASDAQ futures, high probability intraday trading. There's 11 other day trading classes. Bonus number 7. This is a huge one. Timeout. I don't care how experienced you are in this business. Write this down. The 5 essential building blocks to successful trading, okay, with 43-year veteran Slim Miller. It is probably, okay, and I'm looking through here because it is probably the most influential class that I have seen. And I was in the business for 18 years before I actually saw this class. And I'm saying it actually changed the way that I look at risk. And it's not often that I say something like, hey, write this down. Go into the archive, watch some of the 101 and so forth. But if you've traded it all, I'm telling you, watch this class. It'll change the way you think about this entire business. And I really do mean, like, when I say change the way you think about the business, okay, look at the business very differently after watching Slim Miller's class. we could easily charge $1,000 just for that class. We initially did. We just incorporated it. Like there's nothing that you're not getting for the $300. We don't hold anything back. Bonus 8, quick start guide to Ultimate Trades. Like anything that you like, you get like a iPhone, and it, has a quick start guide. Actually, an iPhone, I don't think even has that. You buy a printer, it has a quick start guide. We built a quick start guide, a PDF, specifically for Ultima. For those of you that have experience, I wanted to give you a way to immediately be able to go in there and say, hey, I just want to be able to sell some premium without having to watch all the class. And you can do just that. So those are the 8 bonuses plus the inflection point spread class. What our members are saying. Okay, this comes from Pat in January. Thank you for your reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making profit with, and one I can see a pathway to retirement. All right, TheoTrade, we include everything: classes, coaching, email access to the instructors, live trading room, indicators and scans, mobile access, everything you're going to need. We literally have built the Netflix for traders. It's $297 for 3 months. You can sign up right now. It's TheoTrade. Again, theotrade.com/SKU. I am going to be answering your questions here momentarily, but I'll reiterate, not only do we include everything on here, we give you every class, we give you every coaching session, we give you the inflection point spread class, all the indicators, and the indicators you can download. But on top of it, okay, there's a money back guarantee. It's 90 days. And I just want to reiterate it because, hey, listen, we do this for a reason, to make this, a riskless trade ultimately for you. No excuses, no questions, no commentary needed. If you receive your money back, okay, you get a refund. It's okay. Bonus number 1 is on us. That's the whole 101, okay, 101, 201, 301, all those introductory classes, that's on us. And you get to view the inflection point spread class. We can't stop you. You can watch any class you want. Get into TheoTrade now. We provide 30 spots on today's riskless trade. And I'm very clear why we do this. We incentivize people to enroll now. Okay. We incentivize you to roll now. The first 30 individuals today that enroll get the 90-day riskless money back guarantee. We also, you have to recognize, we do that. We give you unlimited email mentoring. Okay. And we have at this point, we're closing in on almost 7,000 clients. We have more than enough instructors, okay, more than enough support staff to be able to answer the emails that come in. I still do a few hours of emails every single day. I still like it. By the way, I learn stuff when people are constantly saying me, and there's nothing anymore that surprises me, okay? But you still learn like the way people view risk, and it's phenomenal, okay? The other thing is, know this, send us your trades. Like, I urge you to do that. You enroll for it. It's completely riskless. Send us your trades. Bounce ideas off of us. The $297 riskless offer has never been available before with Ultimate Income Generator plus inflection point spread class. So with that, what our members are saying, my closed year-to-date profit from Ultimate Trades has paid for the yearly TheoTrade subscription. You get Ultima, quick start guide, right? You get all 100 classes, the chat room, Theo Theta Live, okay? Technical analysis, day trading treasure chest, mindset mastery, okay? Ultimate Trades. You even get the inflection point spread. It's $297 for all of it, okay? Jeremiah, my first 4 trades, following exactly the details in your Ultimate class, just closed out using GTC orders set right after getting into the trade. This paid for your class in less than a week. Very thankful I subscribed to your services. Keep up the good works. Thanks, Jeremiah. If you go right now, theotrade.com/SKU, you can actually download the auto expected move indicator. I am going to be answering your questions here momentarily. Okay. And there's by the way, if there's questions along the way, Brian Aponte's in there. We do have Brandon Chapman in there as well, answering questions. Jeff's in there answering questions. But if you go and follow me once again, this is pop it up here. It's theotrade.com/SKU. You just click add to cart. There's a money back guarantee on there for the first 30 individuals. I will also, it takes me about anywhere from 5 to 7 minutes to see your name populate as you're enrolling. It takes about 5 minutes after you enroll, okay, for me to see your name in here. And I will be more than happy to read off your name and your just the first name and first letter of your last name. We'll keep everything totally anonymous, just to clarify that you've enrolled for the 30 spots in here. Anyway, it's theotrade.com/SKU. And again, I'm going to come back in here and I'm going to answer some very specific questions. Do not forget, please put your phone number in as you're going along. All right. What our members are saying, I want to drop a quick email. Thank you. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I was watching the recording and doing the homework. I feel each week my knowledge of options trading is growing steadily and rapidly. Obviously, I can't speak for my classmates, but it's going very well for me. Okay. This one comes from Todd Summerall. I put a lot into this particular email. It's because we will answer, when I say trade related questions, I mean, we go out on a limb and say, like, listen, we'll tell you, at times what to do, what not to do with the portfolio. Anyway, I wanted to show that. Don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. Just wanted to thank you for your information. Before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. And I did. Because I want you to see the level that we go to in emails. Anyway, let me answer some generalized questions. Then I'm going to get to specific questions in here. And yeah, by all means, first of all, what do you need to get started? Laptop, internet connection. Frankly, I don't even think you need a laptop anymore. I think you could do this off of any tablet device. It'd be hard to just be on a phone. So I would say you probably would want like an iPad. You don't have to have the good iPad. You have to have like, the $300 iPad, the Walmart iPad. Okay. What we try to do here is provide everything you're going to need, from absolute novice to the most extreme traders. Okay. Second thing, this is not a membership. I know I've said that before, but I want to clarify. Okay. And I really do want to clarify. All right. The $297. That's billed one time. We're not a gym membership. We're not going to be a gym membership. If you want to do it again, people always say, what do I do after 3 months? We'll send you an email. You want to do it again? Good, do it again. $297 for 3 months. Go, what if I want to stop? Okay, we get it. It's like some people travel during the summer. I get it. Okay. It's fine. It's $297. Again, there's a reason we have over 6,000 members here. And it's because, again, we don't, put those constraints on you. We're not here to take $300 for the rest of your life. It's not like a gym membership. You can't get out. The irony here, people do leave, but they always come back, always come back. And I think that speaks more volumes because, people like new shiny objects. So they come to TheoTrade and, a couple new classes and so forth, and stuff starts working. And then they go on vacation, take off like 3 months. They always come back. And again, that's the one thing I always tell people, like, hey, what do your clients think? And I go, I think even the ones that leave come back. We've had people leave, look for better education venues, and they always come back here, right? It's the only place you can go to get that, like, a real education in this business. That's the one thing I constantly stress to you. All right, number 3. We're now providing Theo Theta weekly update videos. So it actually gives you all the moves that we make throughout the course of the week on a Friday morning. I just figured I'd mention that. Number 4, we archive everything. Every word spoken ever on TheoTrade since 2016 is archived. By the way, on the archives, you can even speed them up and play them at like 2 times the speed. I sound like a chipmunk. It's awesome. But the archives are speed sensitive. Like you can watch it on mobile, which is number 5. We provide you access to TheoTrade Mobile. You can download the archives and view them at your leisure. You can actually download the archive and watch it from an airplane. I know everybody wants to go on an airplane right now. It's exciting. Okay. Number 6, add your cell phone number when enrolling to receive trade ideas by a text message, and download TheoTrade for push notifications. So just add your cell phone in there. Because again, it automatically enrolls you. It's a pain when we don't automatically enroll you. Again, it's theotrade.com/SKU. Next, you can email us anytime. You'll receive a response within 24 hours, including trade-related questions. Okay, just a second on this one. Do not email us with 5 minutes to go on a close on a Friday afternoon and expect an email back. I'm not saying that to be harsh. I'm saying that to be real. We trade. I answer my emails, and I usually spend about 2 hours a day answering emails. I answer my emails okay? Usually when the marketplace is closed. So if you hit me right during the trading day, sometimes I'll knock you back right during the trading day, but I trade a lot during the day. I mean, that's what we do. And nothing has changed here from, people always ask that, did you get to trade when you were at TD Ameritrade and Thinkorswim? I traded more at Thinkorswim and TD Ameritrade, than I did when I was actually on the floor in Chicago. Like constantly trade. That's what we do, you know. But we also answer emails, and I do it. By the way, I do an hour every day live. So people will also ask that question. You're like, well, you're the co-founder. Do you still get in there? Every day I am live from the bell, the opening bell, the first hour of trade. Okay. I'll be live. I'll be live tomorrow morning. So we'll email you back. Number 8, you'll gain access to everything we've done in the previous 5 years. Now we're 6 years. Classes, coaching, okay, all archives are searchable. Name an archive. Name a trading topic. We have an archive on it. Like literally any genre of trade. Number 9, variations. All the trade can be done inside of an IRA or retirement account with as little as $2,000. Number 10, we can help you get approved for options trading at several broker dealers. One thing, I saw somebody actually bring this question up. Okay. There are few brokerage firms that let you do more than other brokerage firms. TD Ameritrade's pretty good. Tastyworks, they're the best. They're the best because Tastyworks lets you do stuff in the IRA. Nobody else lets you do it in the IRA quite like Tastyworks. You can sell naked calls in an IRA and only tie up like $600, $700 in margin. It's incredible. Okay. Did you know that they're not any more special than any brokerage firm? They changed the rules 3 years ago, and there's only like 1 or 2 brokerage firms that have actually morphed and changed the rules with it. Anyway, so don't worry about getting approved for options trading. We'll get you approved. Number 11, there are 30 riskless spots available. And I keep watching my screen over here because those riskless spots are going away. I'm going to read off some names here momentarily. So kind of hang with me as I go through here. We're going to read off the first batch of names that's coming through. And again, I may not get every name. It takes 5 to 7 minutes before I see the names. Like, get results, take action, roll for Theo Trade now. There's no risk to you in doing this. And regardless of what you think, this is a skill set you've got to learn right now. Like I don't mean this to scare you, but what are you going to do for the next 3 to 5 years in this business? What are you going to do? If you're going to be involved in this business, you think you're going to be able to find the next Tesla coming up? Okay. Stocks don't come up in down markets. Markets move as a whole. Look at some of the COVID darlings right now, Zoom. I mean, even a company as established as Starbucks, they just booted their CEO this morning and brought back Howard Schultz, at least as the interim CEO. That guy lost 33% of his net worth, okay, since January. Howard Schultz did 33% of his net worth. Go look at the stock. It's down. It's up huge today because they brought back, the original guy. That's how serious this is becoming. You got to do something right now. And that's something, okay, the one thing I say is like, you just can't sit there and do nothing, and I'm trying to say like, hey, learn a skill set. It's going to take a little bit of time. Okay. Anybody can do this. Again, it's theotrade.com/SKU. Let me go ahead and read off a few of the questions that have actually popped in here initially. And by the way, a couple of the names. Those of you that are enrolled: Scott W. from Florida, Adam W. from Florida, Alan Y. from California, Silvana B. from South Carolina, Vivash B. from Utah. I apologize if I just butchered your name. David D. from Utah, Dale S. from Wisconsin. Just reading off the first batch of names. Again, it takes me 5 to 7 minutes before I see a couple of these names come through. How big can this strategy scale? Is the cap 100,000? Not even close. So I'm actually running a portfolio right now in 2 different accounts, and I'm actually running upwards of 750,000 in Ultima. Ultima can be run in multi-million-dollar portfolios. It is absolutely scalable into hedge fund size. And we actually do and trade substantially, okay, as a firm, as well as it's actually in a separate corporation in Theo Trade, but we actually trade as a firm. So there's a portion, okay, and a division of our company that actually is trading substantial amounts of capital, but personal capital, I have about 750,000 I'm running right now, specific just to Ultima. It's not including all the other strategies and odds and ends. So it's absolutely scalable. By the way, Robin was saying, so interesting, but a little complex. Why not just buy or sell calls or puts without hedging? You can't survive doing that. It's impossible. Okay. And you know what? Nothing makes the point better than don't listen to me. Look at the market. Okay. You realize when we started this session, I know a lot of people are in tune with the market right now too. Nothing makes this point. I don't have to make the point. We're trading 43.40. You're trading 42.56. You trade calls or puts. You can't afford to be wrong. This marketplace could be limit down in the morning, right? The geopolitical risk. I'm emphatic about this. And I'm not saying this for my benefit. I'm saying it for yours. You cannot survive in this business without mitigation tactics at this point. Maybe you could get away with it from 2020 and 2000, maybe in 21 a little bit when the market was still up. You will not survive volatility. And all we see on the horizon is volatility. Forget about the geopolitical risk. Forget about Russia ever existed. Okay. Let's say it ended tomorrow, and let's hope it does end tomorrow. It won't make a difference. And I'll tell you why it won't make a difference. The commodities have already burst to the upside. Inflation, it's rampant. And the moment the geopolitical risk calms down, and the moment that COVID calms down in Asia again, all you're going to hear is the loudest drumbeat you've ever heard from the Fed. Quantitative tightening, raise rates, raise rates. When was the last time, okay, that you saw oil, okay, crack over $100 a barrel? It's down right now, but last time you saw oil crack over $100 a barrel, even hit $130 a barrel with the rates at zero. Never happened. And then people compare this to the 1970s, you ain't even close. 1970s interest rates were sky high, and they actually caused stagflation. We're at a zero interest rate environment heading into the most difficult economic conditions we've ever been in. And I'm going to tell you unequivocally, it's the greatest time ever to be in this business and to sell premium, because you can't handicap anything. I'm not asking you to handicap anything. All I'm asking you to do is learn to sell premium, structure the hedges. There's no complexity when I'm actually texting you out the trades. Okay, forget about it. Like, you don't have to worry about that. But I'm pretty emphatic about it because, I can't tell you what the market's going to do tomorrow, but I can absolutely tell you, right? This will be the toughest year of your life if you don't learn something about this business, right? You can't buy stock in here. Oh, I'm going to find a bottom. Okay. Hey, you know what? I've been looking for a bottom in Zillow for a while, haven't you? Like, take a look at some of the stocks this year. Like, that already broke down, but I was saying a year, I was talking about Starbucks a moment ago. Like, really, forget about even some of the questions in here. Like, this stuff, it's important. It's important. As I said a moment ago, Howard Schultz had to come back. Why did this guy have to come back? Because he lost over 30% of his net worth since the beginning of the year. That's the best 12 weeks of his life. Stock actually jumped. Doesn't make a difference. The Fed just spoke. Fed speaks, market's listening. We're already selling off. Okay. Get it through your head. It is not only going to be a difficult time, this could actually be one of the most difficult times. We could be in 5-10 years. This could be another lost decade. And a lot of people don't remember that roughly from the peak of the NASDAQ until 2008, there was a lost decade in there, right? The only thing that saved you, save me, Fed. Fed can't save you right now. They got inflation to worry about. It's going to be a rough time in this business. I don't say this stuff to scare you. I say it because it's reality. Will S from Texas, Tony B from Florida. A couple more names coming through. All right. Again, it's theotrade.com/skew. A few more questions. Okay. Oh, somebody said, what size account required to sell short, as you suggested? $2,000. So it's $2,000. No more, no less. You have to have $2,000 inside the account, though, to be able to deploy these strategies. And you absolutely can deploy the strategies. And again, I'm on Tastyworks. You can see I only have $1,200, but that's inside of an IRA. So it's my IRA. All right. There's no more pattern day trader rule. We know how to circumnavigate that for smaller accounts. So Michael, no concern whatsoever. People always look like, the PDT rule. I can circumnavigate the PDT rule in one sentence. We'll teach you exactly how to do that. Feel free though to hop into the chat room. We'll teach you around the PDT rule. So it's never an issue over there. We already talked a little bit about Tasty Works. Okay. By the way, somebody said, why do you keep digging a hole around around iron condors? It's defined risk. Iron condors actually right now are to your detriment. Do not trade iron condors. Presently, the skew is too high. If you'd like, I would love to spend a time walking you through. If you do iron condors right now, doesn't matter what expiration you're in, iron condors, because you're actually selling a put and then buying a further out of the money put, you're offsetting skew. Skew is your edge right now. And the iron condor itself, if you actually ran calculations on it and did iron condors hundreds of times, they have a negative expected return. It's actually the first time pretty much in my career that I've ever seen that, but the skew is too heavy right now to do iron condors. You're already dead. I mean, if you just kept trading iron condors, no matter what criteria you're using, you will not survive. It's unfortunate, but it's not a good time to do so. And again, there's actually a paper that I can provide to you. It's a Goldman Sachs paper. It was written in December of 21. And by the way, when I say there's like a paper, like, listen, I don't, as I said, this is no holds barred. I will show people everything. Okay. Every nuance. The paper actually backs me up 1,000% on here. Volatility has been on the move final weeks 2021. The entire paper goes into detail for those of you that are volatility geeks about why you should actually sell premium. So I know people don't necessarily trust Goldman, but that's fine. But again, the paper is just, it's academics, but these are academics that actually do trade. So by all means, I'd love to show you that at some point along the way. With that, I know that a couple more people are signing up right now. There's a handful of spots. It takes me about 5 to 7 minutes to see some of the names populated in here. If you have any questions, we'll be here for the next few minutes. I want to thank each and every one of you for coming out here. For those of you, again, if you're signing up, fantastic. See you inside of TheoTrade. I'll be back on tomorrow morning, first thing. A few more names: Douglas G. from North Carolina, John R. from Texas, Jeffrey S. from Colorado. The indicator is actually located right here, auto expected move indicator. For those of you that are enrolling, you don't need to download the indicator from there. We have all the indicators for you on the site, and I'll share anything right off my desktop directly to you guys. I want to thank everybody. If you need anything from us, support@theotrade.com. Thanks everybody on behalf of myself and everybody here at TheoTrade. Thanks for spending your afternoon with us. Bye-bye.